Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Just realized I was muted. How is everyone doing? I hope you all had a great day on Wednesday, and I hope you survived one of the biggest news events we have this year. So what we can do is, and I'm going to put this up to you guys, we can either go over the Fed cuts if you guys want some clarity, or we can continue as normal and we can go through the markets as we normally would and cover some charts. It's completely up to you guys. And because we had such a busy news week, what I'm going to do for you is I'm going to give you this link. So some of you may know what this is, but this is the private research that I put together every day. So I'll give this one away to you guys for free. I'll just put it into the chat for the A1 team to give to you. So what you'll do is you'll see a password on there. Today's password is just this. So the link should be sent through soon. There you go. So yeah, essentially what that is, it's a breakdown of all the recent events within the markets, and it's just research on all the different sort of G10 assets, gold as well, and some other things. But anyway, last note regarding that, if you want to keep the research that you see, you will need to copy and paste it or screenshot it, because the password and the link change every day as I update research. So if you don't save it and you want to access it tomorrow, you won't be able to. So just keep that in mind. Okay, so it seems like you guys are wanting more to do with the rate cuts, which is completely fine. So someone's just asked for the Bank of England meeting, and actually you can see it on the screen. I have a trade planned here on the pound Swiss. So pound dollar also would be a good one regarding this. So what we saw today was the Bank of England held rates at 5%. We also have the Fed that has cut rates by 50 basis points yesterday. So just to cover the pound Swiss position, we have the trade balance for the Swiss that has declined again. So the Swiss isn't looking great, to be quite honest. So, you know, take that what you will. It's also viewed as overvalued, although the S&B is projected to tolerate that temporarily, sort of in the short term. So yeah, the pound Swiss position looks quite nice. As I said, we had pretty good, oh well, I should say pretty hawkish news for the pound today. CPI also backed up this idea. It didn't really lead to a rate cut perception. So yeah, looking for just a very simple retest of previous resistance. You can see we broke through on the news, looking for a pullback, and then we will enter into a long position here. The dollar is the dollar has been sat at quite a strong level of structure for the past couple of weeks now, or past 1 to 2 weeks. And it's just between the 100 and the 101 level, really. So after we've had the Fed cuts, which obviously came out at 50 basis points, which was quite aggressive, but we'll go into that a little bit more in a minute. I am looking for this level to get broken. And when we do see this level broken, it should theoretically be quite a nice melt to the downside, really. So something along these lines. Obviously we do have some small levels here, but the long-term target I have is sort of the 88 to the $90 level on the DXY. Oh, thank you A1 guys for putting the password again. Gold will drop. Yes, gold has a chance of dropping. Now there's not much reason for gold to drop in terms of the market drivers behind it, and the reason is because we've got global tensions, things in Russia, Ukraine are still ongoing. We still have the Middle East problems. We've just had news that I think it was in, I can't remember where it was actually. There was the, what are they called? Those things, the pages. That's it. The pages are exploded essentially. They injured and killed quite a few people. So that's an obviously an aggressive move. Because it seems like it was planned from everything I've seen. It was like an intentional act. So tensions in the Middle East are continuing, is the point. We also have the US elections coming up as well. So essentially, gold still a very, very good asset to look to buy. However, what we also need to pay attention to is profit taking. So we've had the rate cuts. Gold's essentially at all-time highs, give or take. So yeah, a profit-taking dip isn't out of the question right now. Now, I'm not saying we will get it. It's just one of those things that you need to be aware of and you need to definitely pay attention to. So if I'm looking to buy gold, which I am, I need to see this 2.5% drop. So I would need to see this drop back down to the previous level of resistance, retest, and then potentially move to the upside. Basically, exactly what we had here, where we broke out of resistance, broke out of new all-time highs, and then came back down to retest and then continued up. So that's the plan. Whether we'll get that, don't know. We'll see. How the UK can't see what's going to happen is insanity. They should have cut at least 25 today. Yeah, well, doesn't matter what they should have done. They haven't. So time to capitalize on that decision. Leading on to, I don't have it here actually. Pound dollar is a very, very strong setup now. Obviously, the Bank of England held rates, whereas the Fed has cut. So this is kind of a no-brainer in terms of rate differentials. But we are stuck at this level of resistance. So I would really like to see some sort of pullback here. As always, nothing crazy, just back into this fib zone. So between the 0.5 and the 618. And then we'd look for an entry long, something along these lines. And then I think the 1.36 target is still in play. So we go 1.36. This was, I'm not sure if it still is, but this was a level that I think it was MUFG or Credit Agricole. One of the institutions was looking and targeting the 1.36 level. So yeah, something to keep in mind. Gold, buy or sell. Gold is weight. Yes, looking for a retest. So let's have a look at the Fed cuts briefly, and then we'll go on to some other market things. So the cuts were interesting because we had the CME Fed Watch tool basically tell us it was going to be 50. Although I was more looking for 25, I actually positioned myself in the markets for 50. So what I'm going to do is actually show you some positions. So you can see I took a short on the dollar yen right here, hit take profit. We also had a long on the S&P. So I took a long position right here, and this one hit take profits as well. So we positioned ourselves in a way that 50 would be very profitable and very beneficial for us. And the reason is because obviously the CME Fed Watch tool, as I said, was the higher probability was in favor for 50. One of the other traders at Elite Traders also had the idea of 50, and he is much more experienced in terms of the economics than I am. So I was willing to position myself in that way. So that did happen. So we've got 50. The next thing going forwards is, are we getting another rate cut? And the answer is likely, but we don't know. We didn't really have any signals. It's a case of what it's been for a while now. It's very data dependent. Although Powell didn't sound dovish, it wasn't a speech where market participants are panicking and saying, oh my God, we need to sell the dollar. It's more a case of, okay, well, it's likely that we will get another rate cut in December, but we don't have any evidence for that yet. The data isn't there yet. So it'll be interesting to see how NFP comes out. And obviously CPI going forwards. That will help give us some direction. But for now, I am still positioning for bearish dollar. So we'll see. Do you think dollar has the potential to drop more? Absolutely. I'm currently in dollar shorts as well for longer term positions. So we are in dollar yen shorts right here. Just needs to move across a bit. There we go. So we're in dollar yen shorts. We're also in dollar Mexican peso shorts as well here. So I'm just now looking for the pound Swiss long position. But yeah, we're at Elite Traders anyway. We're looking for a lower dollar. Australian dollar's worse. It is. Although I am looking at the Australian dollar New Zealand to the long side. So I must have been looking to go long here. Unfortunately, I didn't take this, but there you go. So yeah, if we go back to the research tab that I shared, let me just pull it up. You can see we have a trade idea in here. Now, I say this all the time when I share this, but these aren't signals from me or Elite Traders. These are trade ideas generated from the information within the research. So it may not work. You'd have to do your own research, do your own analysis, et cetera, as always. But on the sort of surface or the face value, it looks quite good. So the Australian dollar has shown strength due to strong labour market data, while the New Zealand dollar remains under pressure due to contraction in real GDP, with Australia's unemployment growth remaining strong and the RBA not expected to cut rates until 2025. The Australian dollar is likely to outperform. In contrast, the New Zealand dollar's economic outlook is less optimistic, which could weigh on the New Zealand dollar. A long position on AUD NZD could leverage the economic divergence between the Australian dollar and the New Zealand dollar. So, pretty obvious that we would be looking to go long here. What I also need to do, actually, just briefly, is check what's on the Edge Finder. Let me just refresh it. Make sure we've got the newest data. Because I don't think, yes, AUD New Zealand's not here, which is a bit unfortunate, but that's fine. So we can see the daily is actually just rejecting this 200 daily moving average through here. So this is acting quite nicely as a dynamic support. So buying from this level wouldn't be too bad. We can see the weekly as well has actually just bounced off the 200. So technically, actually looks quite supportive to go long. So now it's just a case of where do we actually get the entry? And from this, what I want to see is the two moving averages here also cross to bullish. And then hopefully we move to the upside, retest here, and then move to continuation to the upside. Excuse me. So yeah, very simple. Just waiting essentially for the H4 to change trends, and then we can get into some long positions ideally. So yeah, that's the situation there. Unemployment's coming out. Let me double check. Oh, it is. Tell you what, let me put this on the side. We can do this. There you go. Unemployment in 1 minute. We'll keep that up. Full port now. Definitely don't full port. How much do you look at trading per day? All day, really. So I only place swing trades once or twice a week, if that. But then day trades, I'll maybe take 4 or 5 a week. But yeah, I actually find day trading so much easier than swing trading, to be quite honest. It takes a lot less effort because my day trading strategy is very mechanical. So I can sort of execute over and over. Whereas, okay, so we have positive news. We've got less jobless claims, which is good for the labor market. So yeah, that would essentially be quite positive for the dollar. So yeah, you can see initial reaction here is fine. Fed Manufacturing Index, or Philadelphia Fed Manufacturing Index, is 0.17. That's quite a large difference there. So yeah, not bad for the dollar at all, actually. What's the recommended approach to news for an intermediate trader? I'll be honest, Collins, and this is probably going to sound a bit mean. I don't mean it in a nasty way, but you're not an intermediate trader if you're asking for a news approach. There's two ways, essentially. Either don't trade news or hold positions through news. I always hold if I'm in day trades, I'll hold positions through news because personally, I'm happy to risk 1 to 2% to make 2 to 4%. But I'll only do that with one position. And that's just my personal approach. But, some people will just avoid news, close out before or open after. But yeah, I wouldn't trade news specifically. So if I saw we had jobless claims coming out, I'm not going to start placing positions 2 minutes before. Where is Nick? Nick is a wedding. I think it's his sister's wedding, I think, if I've got that right. So yeah, anyway, positive news for the dollar, which is good. So a little bit less stress there. However, is it enough to really support after a 50 basis point cut? We will see. I don't think so. I think we will see a little bit of relief here, but nothing overly sustained. What about gold? Yes, his sister is sealing the deal. Good stuff. So yeah, gold moved to the downside as we see a stronger dollar briefly. But yeah, I think the idea has not changed. Waiting for a profit-taking dip, and then looking to really buy from the previous highs. Use this as a retest level, and then get in. Yes, I'm short on UJ, but it doesn't matter. It's these are swing trades, so a little bit of positive news for the dollar doesn't matter. The Russell is a good point. Actually, I've got this one on my watch list. So we have obviously had rate cuts, which is positive for stocks essentially, and obviously good for the Russell. So if anyone wants me to explain why, let me know. But I think Nick's explained why quite a lot. So I won't recover that unless you guys want. So yes, we are looking for, as always, a 50% retracement from this move. And it doesn't really line up with any structure, to be quite. Yeah, I suppose we've got some highs here, but it's nothing major. So this level isn't the best, to be honest. So we'll see. But yeah, generally speaking, just looking for some sort of pullback on the Russell to start buying. Short UJ here also, target 138. I think that's very similar to my target, if not the same. Yeah, silver, same position as gold. Very bullish on a lot of the commodities and the indices. Still looking to get short on oil. Looking to go short off this level, just looking for the retest. This would also meet the 200 moving average, which would be quite nice technically to get into. So I'm still sat watching here. The dollar CAD, we can take a look there. Don't have this one on. So I think, again, there's actually some research here for dollar CAD that we can look at. There we go. So we're getting dollar CAD long. The Canadian dollar is lagging behind other G10 currencies, particularly due to its high correlation with the USD and weaker global growth outlook affecting oil prices. With the Fed starting a rate cutting cycle, the USD might soften overall, but the CAD might not benefit as much due to its dependency on commodity prices and weaker economic performance. Therefore, a long position on USD CAD could potentially benefit from any downside on the CAD, especially if global growth concerns persist. Now, I'm not going to get into this trade. I don't really want to go long on the dollar yet. Anyway, I might do, but not right now. It would also be good to hedge my $2 bearish positions. But yeah, overall, I think long positions would make sense just according to that data. The problem is technically it doesn't have anything here. So you can see on the daily, we've actually just rejected the 200 daily moving average to the downside. And I'm not sure if the markets are done fully digesting the rate cut yet. So if I was to start buying the dollar, it would have to be next week. We've also just run off this level of resistance. We've sort of retested, and it looks like we've slightly rejected. So yeah, overall, nothing here right now, but maybe next week we could maybe get some sort of pullback or retracement to the upside. I was in dollar CAD shorts, but I closed them for, it was like 0.5% profit. It wasn't much. I think it was yesterday morning, actually. I wasn't looking to hold them. Yeah, I wasn't looking to hold them into FOMC. 50% level is a daily level. I was looking for a pullback there only. Fair enough. So let's have a look. Swiss yen, downside on Swiss yen and bearish on the Swiss. The yen seems to be holding itself relatively well recently. So let's change this to candles. So we are actually seeing some downside on the yen today. However, is that going to last? I don't know. I've been caught in the yen a few times recently. So I'm no longer interested in the yen. I'm staying away until my wounds have healed, and then I might come back with a vengeance later. But for now, I'm letting the yen do what it needs to do. So NASDAQ, same thing as the Russell and the S&P and all of the US stock market, really quite positive, looking for long positions. So if I was to go long, I would need to see, yeah, just a very small pullback, really. So possibly just an entry off these lows. So I wouldn't be looking for a 50% move on this one, just because I think it has enough steam to continue up. I don't think there's enough drivers really to push that 50% move to the downside. So yeah, I'd be happy to buy off this sort of minor level of support and go in and just have a try here. If I'm stopped out, then fine, I'll enter on 50% and I'll try again. In terms of take profits, I would probably, I suppose there's two ways to approach this. We could target new all-time highs, and we would do that by not having a take profit and trailing the stops up, or you could just target the previous all-time highs or target all-time highs around here with a hard take profit. Now, I generally do use take profits. This is probably the approach I would take. I wouldn't really go in with no take profit unless we break out and continue to the upside into sort of no man's land, if you will. Yeah, okay. Good stuff. So I just want to check something really quickly. So we've already got some data in here for the next Fed meeting in November. So far, we are leaning towards 25 basis points. However, if you remember previously, for the Fed cuts we had yesterday, they started out heavily in favor for 25. And as time went on, and eventually up until yesterday morning, it flipped and it was essentially the opposite way around. So it was, I think it went up to 67% favorable or 67% probability for the 50 basis point cuts. So if we start seeing a pattern like that again, where we see 25 reducing, 50 increasing, we continue to see negative data for the US, I might start positioning again for another 50 basis point cut. It'd be interesting to see what happens. Are you in the trade? I'm not in this trade. I'm in dollar yen and dollar Mexican peso. Yes, Haz, exactly. That's essentially what I'm looking for. Pound yen. Let's see. So yeah, obviously we had the Bank of England hold their rates this morning, so quite a good contributor to the bullish movement we've seen today on the pound. The problem is I'm not convinced on any of the yen pairs really, and it's just because there's nothing coming out of the Bank of Japan. So as far as I have seen, it's just a rate hold. And the issue is the yen is held up quite well with very little really to support it. obviously we did have a rate hike. We had some risk off movements, an unwinding of carry trades, which obviously did help the yen at the time. But since then, the yen has still managed to hold its ground, and that's concerning for me. There's not enough. There's not enough buyers in this market to push me either way. The only thing I can really see changing my mind is if we create a new high. So if we can come up, create a higher high and a higher low, I may try and buy this higher low. But will that happen? Probably not, to be quite honest. But we'll see. It could happen. I could be totally wrong. Euro dollar, I had to cut my losses on euro dollar. So I had to bite that bullet, but that was completely fine. So I've been short euro dollar for probably 2 or 3 months now. So I was short since NFP. So when was it? August. So actually, yeah, not that long, not 3 months. But yeah, I started shorting around here and essentially shorted here, profited from this move here, shorted again and again and again and again. And then yesterday I finally had to take the final sort of trade and take the loss. So I think I had shorts all the way on this move and then exited out right after we had the excuse me, right after we had the rate cuts. But as I said, I was already in some trades that worked out really well. So the loss was insignificant. Seasonality on stocks is not going to play out. Yes, exactly. And this is something I was saying. We had a lot of discussions about seasonality over the past couple of weeks. And seasonality was completely the opposite as to what happened. So seasonality is very bearish on stocks and euro dollar and pound dollar. And I was saying, don't trade off seasonality during this period because it has absolutely no effect on the data that's coming out. It's more just a guideline. And luckily, I hope some people paid attention because it didn't work out. AUD CAD. I think you've been asking for that for a while, so I'll have a look. We must have something here. I've got a line drawn for some reason. Let's see. So yeah, I mean, seasonality is pretty bearish from this orange line. That's why I've got it drawn up. The problem is I would actually be looking more to buy this market. So if we go back and look at the research and we have a look at the CAD, Canadian dollars lagging behind other G10 currencies, and then we go ahead and look at the AUD. AUD has shown strength due to strong labor markets. Obviously, I'm paraphrasing kind of, but I've already shared the link, so go and read it if you want to. AUD seems like it can outweigh the CAD quite heavily at the moment. So I'd be quite happy to look for some sort of pullback here. And this lines up really, really well, actually. So if we can get this 50% move, this would let price meet this 200 moving average, which is the red one. And let's just see if this is structure. Not really. There's not too much within this level, but still, I'd be happy to go in long. We can see the market's overbought as well on the RSI. So if we can see this pullback, this may allow sort of a rebalance of price, if you will, or to get out of this overbought state that we're in, retest this level, and then continue to the upside. So I'm actually going to add this to my watch list. Plan to go long off here. Something along these lines looks good. Aiden Rose is now a streamer. I'm not sure what that means. Sorry. Hello, how are you? I'm new on your channel. Can you explain natural gas, please? Aju, I'm very sorry, but this isn't my channel. I wish it was. But yeah, this is Trader Nick's channel. I'm a guest, and I'm just filling in for him this morning as he's away. But natural gas, we can take a look for sure. So the research says natural gas, energy, transition, and prices. Despite a recent softening in demand, natural gas remains crucial in energy transition strategies across Europe and North America. After a volatile year, natural gas prices are expected to moderate, providing stability to the market. And this is from Goldman Sachs and Bank of America. Price trends. Natural gas prices have decreased due to mild weather forecasts and increased production in both the US and Europe. Expectations of lower winter demand are also weighing on the market's outlook, easing prices in the short term. Demand uncertainty, global uncertainty, and fluctuating demand are keeping natural gas prices volatile. So it sounds ranging to bearish to me. So I wouldn't necessarily be looking to buy natural gas. So maybe shorts are more on the table there for you. From side view, your face looks similar to streamer Aiden Ross. That's why you're saying that. Does it? Fair enough. I don't really know anything about Aiden Ross, but I don't think he's too bad looking. I don't think so. I'll take that as a compliment. So I'm just trying to actually let me see what time it is. Don't want to overrun here. So 45. I think I have overrun actually. Sorry, it's Marco on next. So let me do my outro here. So guys, don't leave the stream. There is another guest on. I think this stream is going to be running for about 3 hours. So yeah, don't leave. I'm only the beginning. I appreciate you all for having me, and A1 guys also. I will see you all later. I think I might be on tomorrow or the day after. I'm not sure, but yeah. Anyway, see you later. Have a good day.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello everyone, welcome to my segment of the show. So I'm Marco for anyone that doesn't know, and I trade these 6 currency pairs live. Okay, these ones here on the list. And then after I do the 6 currency pairs, I analyze these ones for the live stream. So if you have any questions, any chart requests, any risk management, psychology questions, or just a general strategy question, definitely put it in the chat. I have my chat open here on the right side, and I'm going through all of the comments. So I've seen a funny comment. I've heard that natural gas is the widow maker. There are no successful long-time traders of it. That's pretty funny. I don't have any experience with natural gas, but it's a pretty funny comment. So we're starting with the euro and the US dollar. We did have some major news yesterday, at least my time. So it was the Fed interest rate decision, and as you can see, the previous one was 5.5, the forecast was 5.25, and the actual was 5. So it was even lower than the forecast. And the initial result, if we go to the DXY, you can see, where was it, right here? The initial result was pretty bearish. So the dollar was kind of losing strength on the initial news, but then gained strength back up. So if you follow the general methodology is the dollar basically loses strength, I believe. Let me check that. So yeah, basically the general methodology, if you put it in the internet, so interest rates, dollar strength. And it says when the Federal Reserve increases the federal funds rate, it typically increases the interest rates throughout the economy, which tends to make the dollar stronger. So that is what is generally accepted or expected. But basically what happened here is some pretty messy price actions. So the initial result was kind of a drop, but then we went up. And that basically translated into every single currency pair, at least the ones that are connected to the dollar. It is this candle right here, and you have the pound and the US dollar. It was a pretty bullish move at the beginning. So yeah, and I'm also only analyzing the 1 hour chart for my currency pairs because that is the only thing I'm trading. And I do not usually look at news, okay? So I base my analysis, my execution of the trades only on what I can see on the charts, so only on the technicals of the charts. Lauda, what's up? Zav, do you think the US economy is soft landed? Again, my fundamental knowledge is not that good. I'm still kind of learning it, getting into it. So I'm not the right guy to ask. Basically, my technicals are better than my fundamentals. Samart says, I am in USD CAD shorts after 4-hour fake out back into range. Please share your analysis. Sure. Then United says GJ. Okay, so we have USD CAD, we have GJ so far. We'll definitely cover those. But I first just want to give a general consensus on, let's say, the main dollar pair, which for me is the Euro US dollar, and let's say the main JPY pair, which for me is the Euro and the Japanese yen. So just in analysis here on this 1 hour chart, I can see a flat range, to be honest. They haven't taken any trades. I was looking for some buy setups here in the price action, all right? But nothing high probability happened. So we were just pretty flat and corrective in this area. And now we are also producing a lot of volatility, especially after that news, right? Lots of volatility right here. So I don't have this currency pair on the watch list. And I'm looking for just a large push up or just a large push down. Okay, so very simple. I'm a trend trader. I do have some range bound entries, but I prefer to take trending entries, to be honest. So just looking for momentum up or momentum down. And to be honest, here I'm expecting a larger and a wider range, right? So something like this is what I'm expecting on the euro and the US dollar. So that's it for EU. Not moving anywhere. EJ is moving up, so it is moving up, but it is not that impulsive, right? I'm not seeing a lot of impulsive price action. So Shimeri says euro US dollar sad face. Yeah, a bit of a sad face. I would have liked to have seen a nice trend start for the news candle to spark a nice big trend, because we love trends. The only thing we don't like is when the price stagnates like this and doesn't do anything. But unfortunately, this time it could not happen. EJ, again, moving up. I'm seeing some momentum in these legs. For example, here as well on this 1 hour chart. But then it's not that impulsive. So when I say I want to see an impulsive trend, I can give you a good example. For example, here. So this is a very impulsive downtrend. Okay, lots of weakness, lots of major bearish price action, lots of big red candles. Okay, so that is what I would look for. And here we're kind of seeing the price break the highs, retrace, here break the high, retrace. So yeah, not seeing a lot of strength, unfortunately, in this price action. But my bias is for this to possibly continue up. So if we can get a large impulse up like this and then a nice buy setup, I will be interested to look for longs. So I'm not going to put this pair on the watch list just yet because it's not looking that clean. But my forecast, the probabilities are telling me that if this goes up, that we can look for buys. Basically, okay. So that's it for EJ. Now let's go to the first requests. USD CAD. USD CAD. I'm going to start with the daily. Going to do a top-down analysis. The daily, I mean, it looks pretty similar to the JPY pairs. It had a massive sell-off right here, and now it pulled back, but it looks to be ranging around. So I think the 1 hour, as I just saw it a couple of seconds ago, is looking pretty flat. Okay, so you're in a USD CAD short on the 4 hour. I'm guessing you sold right here on this candle, probably. Okay, something like this. So I would say this is a good liquidity sweep play, which is one of the methodologies that I use for trading. It is a range-bound entry. So basically you identify a flat range like this, okay? And then you identify the liquidity areas. Basically, you have the lower liquidity area and you have the upper liquidity area. And you're basically looking to sell the top and buy the bottom and aim for the other side of this range. So that is why there was a liquidity area above this high. There definitely was. And I'm guessing you looked for this rejection and then sold on this candle. So I think it's a good play. It's a valid play. Of course, you need to stick to your own strategy, your own trading edge as well. So do not listen to what I have to say, but stick to your particular strategy and stick to your back-tested edge, because that is the only thing that you know works. And I believe that you have proven in your backtesting that it actually does make money. Okay. If you haven't done enough backtesting, if you do not believe in your trading edge, well, then you have not done enough work to prove that you're profitable, that you can actually make money in the markets. Then you need to go back on the drawing board and backtest minimum last 3 years. I would say 5 is better, but 3 years is kind of the minimum. Okay, then we have GJ. GPJPY on the daily. So for me on the daily, it is a bit flat right here, kind of corrective and range bound, but let's see it on the 1 hour. 1 hour is in a good uptrend. So I do like this 1 hour chart. I can see one high probability pattern, which I do like to trade, and that is the V reversal, okay? Also called a cup and potentially handle, right? So yeah, the V reversal is a bullish pattern, and you do expect an uptrend to start after it, which is exactly what we're seeing now. So if I had to tell you which way the probabilities are telling me this is going to go, they're telling me it's going to go up. Okay. So the probabilities, the technicals, the chart is telling me that this wants to go to the upside, that this is a very bullish scenario. So if I was trading this pair live, I would be looking for some nice high probability buy setups. That's it for GJ. Then we have gold. Yep, sure. Gold is on the list right here for the live stream. We're going to do a top down. So I mentioned this in my live stream yesterday, I think it was. No, it was, yeah, yesterday, that gold finally broke out of this range. So all the way to the upside, we were pretty corrective, right? Pretty correctively breaking the highs and retracing, which was not really a bullish scenario. It was more kind of like a corrective scenario for me. And then finally, we did get a strong breakout right here of two very nice daily candles. And now we're starting to pause a little bit right here, okay? So a little bit of a pause. 1 hour is looking pretty corrective. So kind of the same story as the euro and the US dollar, right? So we had news happen right here. And now I'm just kind of expecting more flat range bound and corrective price action. So I'm expecting something like this to happen. Okay, just a flat corrective range to continue. And I would like to see on the daily this continue up with the uptrend. Okay, so that is what I would like to see right here. If we can just continue with the uptrend, and then I think that would be ready for some nice high probability buy setups. I think Nick is in a buy setup from here somewhere. Not sure, but I do remember him telling me last week that he was in a buy setup on the live stream. So for him, this is running some very nice profits, which is great to see. Now I'm just going to check the charts. Because how I trade only on the 1 hour chart. and I check the charts on top of each hour. So now it is the closing time of the hour. So time for me to check the charts and see if there are any opportunities in the market. Just a quick, brief overview. EU is pretty flat. EJ is pushing up, looking for buy setups possibly. AU pushed up, but now has gotten a lot of selling pressure, which is not good to see. AJ pushing up, so we'll see if we can execute some buy setups. Pound US dollar looks pretty corrective right here, pretty range bound, and NJ is also continuing possibly to go up. So potentially looking for buy setups on NJ. Okay, so that is the game plan. Now let's continue with the live stream. So, hey Marco, have you tried or backtested your strategy in different time frames? No, not really. Not really. So I'm just sticking to the 1 hour chart. It's kind of simple for me, and it just gives me the freedom of time as well. I definitely do not want to go lower. I do not want to go on the 15-minute. Going higher, maybe on the 4 hour or the daily, I think that would just mean there would be less opportunities for me, right? Because the 1 hour does give us nice opportunities, but also it's not as fast, and you don't have to be glued to the screen as you have to be with, let's say, a 15-minute. Let's say a 15-minute chart, right? So I think the the 1 hour chart is the sweet spot for me. In the future, I may look into it, but for now, I have only backtested the 1 hour chart. Daily closure respecting rapid liquidity from upside. Okay, that was for the USD CAD, I believe. USD JPY. Okay, I know you guys like USD JPY. It's gonna look similar to other JPY pairs. So this is pretty descending on this daily chart. For me, this is kind of looking to potentially reverse and maybe start an uptrend. Okay. So looks to be pretty descending, and now we're starting to see some bullish momentum. So if we can do something like this, that would be a very bullish pattern, okay? And this daily chart is starting to break out. So it is starting to push up. Hopefully this can go up a bit more, maybe print a nice clean close, and then we can look for, again, just a bullish impulse and then a nice buy setup, okay? So maybe that can happen on USD JPY. If I zoom in on the 1 hour, yeah, it's gonna look kind of corrective. It's not really that impulsive. So when I want to see impulsive price action, I want to see something like this happen. Okay, I want to see those large momentum legs. Okay, I want to see them happen with small pullbacks. Here I can see pretty corrective price action. We're breaking the highs, kind of retracing. Again, broke this major high, retraced. Here we saw some momentum, but then we saw some major selling pressure after that. So it's not looking the cleanest on the 1 hour chart. The daily is looking a bit better, but I would like to see this close like this. That would be a textbook reversal setup for me. It is also one of the patterns that I trade, and it basically looks like this. So price is struggling to go down, and then it finally reverses. You get in on a retest of the high, and then it possibly starts an uptrend. Okay, so that is how it goes. Yeah, so USD JPY, that's done. Please, what moving averages are you using? I'm not using any moving averages, so I'm just looking at pure price action. So just the technicals, just the price action, candle formations, and that's the only thing that I'm looking at. All right, so that is my trading. I do not look at moving averages, no news, no volume or anything like that. Channels, I kind of look at channels. Okay, I look at channel formations. For example, for me, this would be a channel formation right here, and a clean one. Okay. So where is Nick today? I think Nick is on vacation. I believe Nick is on vacation this week, and I think he'll be back next week. Andreas, also, how come you don't trade CHF pairs at all? Well, for now, I'm only trading D6 pairs. Again, in the future, I may expand that, but I have found that the strategy that I'm trading works the best on these currency pairs. So yeah, maybe in the future we'll look at some CHF pairs. If you have any requests for chart analysis, put it in the chat. We can take a look at some CHF pairs. And okay, Kwame asks for BTC. Yeah. BTC on the daily chart, it's actually pushing up a little bit. That's okay. That's good to see. But overall, I cannot make a decision. I mean, for me, this is just kind of stuck in this range, stuck in this price action, just not moving up, not moving down, just ranging around in this area. So it's not looking the best. It is actually looking pretty corrective and range bound. For me, I'm just looking at the key levels. I'm looking at the all-time high, and I'm looking at this low. I'm just gonna wait, be more patient for the price to reach these areas, right? And then I would see what will happen. Or the lower area, maybe pierce through it. Until we reach one of these areas, one of these boxes, I'm just gonna be more patient with Bitcoin, and I cannot really make a decision. EuroCAD, yeah, for sure. EuroCAD. Starting with the daily chart, for me, this is looking pretty flat, to be honest, right here. It's looking pretty flat and range bound. I'm just seeing a flat range. I'm not seeing any decisiveness. On the 1 hour, flat as well. We did have an uptrend right here, but it could not be sustained. So the uptrend could not be sustained. As you can see, instead we started to print just a flat range. Okay, so we started to print a flat range right here, and I'm just looking for, I would look for personally for a large push up or a large push down, which is kind of the same thing I would look for on the daily chart as well. Okay, I would just look for a large push up or a large push down. For me, this pair is not currently trending, not on the daily, not on the 1 hour, so it's not looking that good. One thing we need to definitely do is, of course, the S&P. S&P is looking pretty bullish right here. Now, this is a very high probability bullish pattern that I can spot on the S&P 500. It is basically V reversal right here, V reversal right here as well, or some people call it the inverse head and shoulders. You have the left shoulder, you have the head, and you have the right shoulder as well, and then you expect the price to go up. So this is a bullish pattern, okay? This is a bullish pattern, and I would expect the price to actually go up and possibly show me some nice high probability buy setups. Okay, that would be on the radar. Some nice high probability buy setups on the S&P. I like this price action. On the 1 hour, let's see it. I mean, the 1 hour, look, this is how the S&P moves. I did try to implement my trending entries on the S&P, and it didn't go that well, I have to admit, because the market doesn't move with much force like this and small pullbacks. Instead, the market kind of moves in these channels, right? So I have the channel tool here. It moves like this, so kind of in channels, but it is still bullish price action, and I would expect more upside on this 1 hour chart as well. Here we were pretty impulsive, here pretty impulsive as well, but here again just not seeing that sort of strength that I like to find in Forex, right? So those are kind of the differences between Forex and the S&P. They trend a bit differently. S&P trends, I would say, more correctively with deeper pullbacks, and the breaks are not that strong, but it's still moving up. So S&P looks good. Kwame says, thank you. What time frame do you look for momentum? Only on the 1 hour chart. So for my live trading, I only look at the 1 hour chart for everything. I do not go up, I do not go down. I just focus on that 1 hour chart. US 30, sure, we'll do it. Okay, let's put it up. US 30. Pretty bullish. Pretty bullish. The US 30 looks pretty good. Looks pretty similar to the S&P, okay? With those V reversals, right? So pretty bullish, or an inverse head and shoulders. So left shoulder, head, right shoulder. And I would expect something like this to happen. That is at least what the probabilities are telling me, that something like this is going to happen. On the 1 hour, I mean, it looks sort of the same as the S&P. Very similar, very similar. You have some nice momentum here, here nice momentum, and then it overall moves in a channel, okay, like this. So overall, it is moving in sort of a channel fashion. Omar has a very good question, which is, what are the benefits of backtesting, in my opinion? So backtesting is absolutely essential for a trader's success. If you haven't backtested, and I mean thoroughly backtested your strategy, you will not have consistent long-term profitability. So backtesting is not an option, it is a requirement for profitability. You must prove on historical data that your strategy works, that you can make money in the markets, and at least the last 3 years. Okay, minimum last 3 years. 5 years would be better, but at least the last 3 years of backtesting. And if you cannot make money with your strategy on last 3 years of data, well, then you have a problem. How do you expect the strategy to make money in the live markets? And if you skip on the backtesting and you start live trading with a strategy, as soon as the first drawdown period comes, as soon as the first losing period comes, you will quit that strategy, okay? So you will definitely not have the mental fortitude to stick to that strategy through the drawdown, through the losing period. But if you have the backtested data, if you can see that you can make money, so that you can make money on the last 3 years with your strategy, well, then you know you can replicate that performance in the live markets as well. So that is why backtesting is extremely important, crucial part of trading. Everyone does it. The professional traders do it. The hedge funds do it. The real prop firm traders do it. If you don't do it, you're gonna fail. Okay, Nasdaq 100. Sure. Yeah, Nasdaq is probably gonna be pretty similar. Yeah, Nasdaq looks a bit worse, okay? The S&P looks better. I have to say on the daily chart, it's now breaking out as well. So the S&P looks pretty good, while Nasdaq looks a bit more bearish, I would say, because it's still not close to this high, right? Still has some way to go. It is printing bullish patterns. So we have the V reversal, okay? That is a pretty bullish pattern. So it's definitely printing bullish patterns, but it's not looking as good as the S&P. Not as bullish. Moving up on the 1 hour chart, again, it moves in these channels. We kind of already know that, but it is bullish. It is pretty bullish. So that is my analysis. Do you trade GBP JPY? I personally don't. I trade the pound and the US dollar, but not GBP JPY. We can take a look. JPY. And we're approaching the end of my segment. So I think this is going to be the last pair that we break down. So I'm going to do the 1 hour chart. Looks pretty bullish, pretty bullish. It has this V reversal pattern that I just talked about. That's a bullish pattern. And then it has a nice chunk of momentum right here. And again, some decent momentum right here as well. So I am bullish on GBP JPY. And I would expect for the uptrend to actually continue. Okay. So I would expect something like this on this currency pair. We can do just a quick gold check for Drippy. Just a repeat. So gold on the daily is looking bullish, right? It's looking pretty bullish for me. It broke out of this range. It started to show some momentum as well on the daily chart. Some two very nice daily closes. And yeah, it was slowing down, but now it's starting to pick back up again. 1 hour is flat though. So the 1 hour is pretty flat. it is the reaction to the news. So I would expect more range-bound price action on the 1 hour chart. And that's about it. That kind of wraps up my segment. Definitely stay tuned because we have another guest coming up. And yeah, thank you guys very much for watching. And I will see you next week on the live stream on Thursday. I think Nick will be back as well, so it will be the Thursday trio. Okay, so yeah, thank you for watching and see you.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Okay, what's up, people? Welcome back to another stream. Hope everyone is well. As always, any markets you want me to take a look at, just drop it down in the chat and we'll discuss, see what's going on, which markets people are looking to trade. I'll go over some markets I'm looking to trade myself, what I do have my eye on for the rest of the week and for next week as well, because it's already Thursday. So kind of have one eye on next week. But I was in some Euro USD longs last time I was on the stream, which was on Tuesday. So prior to the Fed interest rate. Unfortunately, I did get taken out of the position for, it was a small win, so I can't complain entirely at that. But I did have an entry around here, stop loss underneath the low. I was looking to trail, seeing how far I can take price. And then when we had the news yesterday, I did trail my stop loss underneath that low then. Unfortunately, I just got taken out by the pip pretty much. And now price has kind of pushed in my direction. It's one of those unlucky trades. You know, you got to charge it to the game. It's difficult to completely mitigate against this happening. If you trail stops, there will be situations where you unfortunately get trailed out and you still see price moving direction, but still walked away with a small profit, so I can't complain completely. But Euro USD's had a nice move, so that's a quick update from that trade on Tuesday. In terms of myself now, not in any positions. I'm looking at quite a few pairs. I'm more focused towards the yen pairs, looking for some big swing positions to the downside. In regards to dollar, I'm kind of just seeing what happens really, because dollar's finding it really, really difficult to break through 100.6. This has been a sturdy level of support, and price is still reacting and still holding that level of support right now. Strong reaction there in the 4 hour, see on the hourly as well. So the level is holding pretty firmly and could, if we do keep this up, we could see a push back up to 101.800, closer to the 102 area for USD, which could mean some USD strength, which might mean Euro USD might come down, Pound USD might come back down. We'll touch on those pairs in a moment. But I think it's really interesting to keep an eye on for the dollar, because this could mean a lot more upside if we are successful in terms of respecting this level. In terms of the yen pairs, which is where my focus is, I'm looking for a lot more downside on them. I think Swiss yen is still my favorite out of the yen pairs, because I'm looking for another daily swing high. So we had a swing low there, swing high over there, lovely move to the downside, creating some new lows. Now I'm looking for that next lower high. This is my first area of interest, but essentially, as long as we don't break above the high here, I'm looking for shorts, and I'm looking for us to come right back to the low. And I do have some extended targets, which I will look to target essentially. So very bearish on the yen pairs. At the moment, they're still pretty bullish. So there's no entry for me just yet. Swiss yen is pushing up pretty hard. The Aussie yen as well. Dollar yen to an extent. Euro yen is pretty bullish. New Zealand yen, pound, CAD yen, they're all looking pretty bullish. So they're not ready to be shorted yet, but I definitely do have my eye on it. Guys, don't trade smaller time frames. Yeah, I mean, I'm not a big fan of smaller time frames either. I like kind of hourly, 4 hour and above. That's kind of where I spend most of my time. So, and recently I'm now starting to focus more on the H4 and above. So I'm not the biggest fan of smaller time frames, but yeah, there are opportunities in the smaller time frames that people do take advantage of, but I'm not one of them. Pound Aussie leak we can take a look at. Definitely Pound Aussie was pretty bullish last time I saw, but looks like that has kind of depleted a little bit. Had a brief spike to the upside. I think that's off the back of the pound interest rate decision this morning. But it looks like price has failed to sustain that momentum a little bit. We've pushed back down. For Pound Aussie, I was looking for a lot of upside this week if we could hold this level here at 1.95. Has proven to be sturdy resistance on the daily chart once, a couple times over there briefly as well. I was looking to see if we could hold this as support and then continue to the upside back to the high at 1.993. That hasn't happened this week. We've broken underneath, so I just expect price to now move into the next big level on the daily chart, which is around 1.93250. So big level here on the daily chart. You can see massive resistance there as well, and was briefly support not long ago. So I do think Pound Aussie is going to be attracted towards that level there around 1.9325. So I would be bearish on Pound Aussie. I do think more downside to be had. I think in terms of entries, maybe you might have missed the boat. The ship is already sailed. Unless price is kind enough to come back and retest the level again, and that possibly could be a nice opportunity to short it. But we had that retest yesterday with this rejection here. So it looks like price might already be on its way. But if it does come up again, there could be some nice shorts intraday. It kind of stops above the high and look and see if you can target that low. Because we've broken through one level, price has got a good chance of getting to the next one. So that's kind of what I'll be looking at for Pound Aussie. More bearish momentum until the 1.93 area, and then we can analyze and see where we can go from there. Big time frames is where it's at. Yeah, I agree, to be fair. I agree. I think even if you're going to turn, I think even if you're going to trade in the lower time frames, I think still keep an eye on the higher time frames, because that's where a lot of the big money is. So I think just in terms of your analysis and knowing, okay, gold might still be bullish in the high time frames, but I can take some intraday shorts and still profit from that. But I'm well aware that the bigger move might still be to the upside. So knowing that and having that information is obviously going to be useful. So even if you are on the lower time frames, I do recommend keeping up to date with the higher time frames as well, because as long as it's not confusing you, it's definitely going to be a benefit. So I do recommend that as well. Charles, what's up? Pound NZD, we'll take a look at, no problem. Okay, we'll take a look at oil as well. Mandy, what do you think about average percentage gain in a month should be? Well, it very dependent on the trader, depending on the size of the account, the trading, depending on their circumstances. I would say anywhere between 1% and 5% is pretty sustainable and pretty reasonable for a retail trader, I would say. But then again, depending how much risk you're going to take, you might be pushing to go around 5% and maybe above. If you're not going to take as much risk, because maybe you've got a big account so you don't need to, then you can go a lot lower in terms of percentage. So it's going to be dependent on the trade and how much risk they're willing to take. But anywhere between 1 and 5, from my experience, is pretty sustainable. If you're looking to go more than that, you can be taking more risk, which you might be able to manage. But if you're not used to it, you of course increase your chances of blowing up. And of course, the more risk you take, the bigger returns. But then again, it might not be sustainable. But between those figures, I'd say is a comfortable place for a retail trader. In terms of not pound USD, pound NZD, that's the one I'm supposed to look at. In terms of pound NZD, yeah, I'm not the biggest fan of this one, to be honest. Let me know your bias and what you're looking to do with pound NZD. Yeah, I'm not a big fan of it. I did say early in the week that there's 2 areas which I wouldn't mind getting involved with this one. It's if we do push back to the higher here at 2.145, that's a nice place for a short. And I wouldn't mind this place here for a long as well, 2.09. 2 big areas which could give us some nice reversals. So we've got a massive daily level here at 2.09. If price can push into that level, it's proven to be resistance twice in the past. I think that's a solid place for a buy if we were to get there again and see good signs of rejection, I think that's a great place to go long. And likewise to the upside here, this is our price swing high. Lovely push to the downside. If the market was to revisit that same area, I do think that's a nice place to short as well. So yeah, pound NZD, if we can push higher up or come a lot lower, I think there could be some nice opportunities there. But where we're trading at the moment, I think is looking very, very chaotic, and I would try and stay away from that as much as possible, because finding some entries, finding some stop losses in there, targets as well, is always going to be a little bit difficult. And yeah, the price action is just too chaotic for me. So if we can push higher, 2.145 shorts could look good. We have to see how we get there first, of course. Same with the buys, but that's where my focus would be. So yeah, that's kind of where I'm at with pound NZD. Not my favorite pair at the moment, I must say. We'll go for oil next, and we'll take a look at pound yen, dollar CAD as well. Looks bullish on the weekly, but seems to fail on the lower time frame. Thanks for your insight. No problem. Happy to help, Charles. We'll discuss oil next. So oil, I'm looking at some downside. I don't trade oil, but I do keep up to date with its price action. So yeah, with oil, I'm looking at something like this. A retest of this level for some more downside. The market has been putting in some nice lower highs. 1, 2, 3. I am looking at the market putting in a fourth over here and seeing another push back to where we came from, because I believe we came from, yeah, pretty big level of support here. So I do think price is going to put another top in, another lower high, and make its way back against the downside. The bullish move is being quite corrective as well. This is not really a bullish move that screams reversal to me. It looks like the market is just having a breather from this dump. Now I'm expecting some follow through there, and this is a really good place to anticipate that. So 71.72, 72, that area there roughly is where I would expect the market to potentially sell off and see the next low high. So that's where my interest would be. But yeah, I'm looking for the market to continue lower for oil. In terms of gold, we'll take a look at gold, and we'll go through pound yen and dollar CAD. So gold for me is pretty straightforward in terms of the analysis, in terms of how I want to trade it, because I'm looking for the break and retest in terms of this level here, 25.30. When we had the breakout last week, things were looking really good. Price was looking very, very bullish. So my plan was just simple break and retest, and then looking for buys on that level. Of course, we haven't got that yet, or we might not get it at all. But because of our all-time highs, there's not a lot of price action to work with. That's the only area that kind of fits my criteria, and the only area which I would be happy to buy from. Anything else I'm not really interested in, especially the price action here. It's getting more chaotic by the hour, really. So looking to get involved here is a bit of a nightmare, in my opinion. It looks like price is struggling at the high, but I wouldn't be looking to sell gold. I'm still very bullish on the market. Monthly time frame, weekly time frame, daily time frame, all still showing a lot of signs of bullish momentum, all giving me higher highs and higher lows, breaking resistance, respecting support. So I'm not interested in the sales at all. With the moves I'm looking to take in the market as more of a swing trader. So the buys I'm interested in are around 25.30. If we get there, great. If we don't, I'll see what we do next. Maybe price creates more resistance and we get another breakout, and maybe another retest could look good. I'll discuss that when it does happen. But for now, that's very much where my focus lies with gold. In terms of GJ and USD CAD, pound yen, I'm looking for some sells. I'm looking for another lower high in the market because I'm really bearish on the yen pairs longer term. I do think with this massive collapse we've had in the yen pairs, we're probably going to see a reversal following that. So I am expecting a lot more downside for these yen pairs. My plan is basically trying to find where that next lower high will form. As long as price doesn't go and break through this high here, in fact, even if we do, I'll keep an open eye. But basically, if we don't break through that high, I'm looking to short it. My first area of interest was this level. It didn't hold. I didn't see any significant price action to enter me into the trade, any candlestick pattern. So this area I'm kind of disregarding for now. But we are approaching another level at 190, which to me looks like a nice place for a short as well. Because I'm basically looking at this as a big sell-off, and now the market's having a breather for us to eventually sell off again as well. So I'm pretty bearish on pound yen, looking for that top. It's still pretty bullish at the moment, so nothing to do yet, but definitely one I'll be keeping my eye on as things develop. And again, my outlook for most of the yen pairs is in a similar situation with pound yen as well. Just looking for the lower high for a big move down. In terms of dollar CAD, this one was really bearish last time I saw it. Ooh, okay, it came right back above that level there. Interesting. This could be a retest or it could be a fake out. Again, the only way to find that out is to see if we can see price reject that level. I probably would say maybe a nice 30-minute bearish engulfing would be nice. Yeah, with dollar CAD, we have rejected such a big level on the daily chart, which is this area here. Massive resistance, massive support, and as of late it is held as resistance again. I'm pretty bearish on dollar CAD. I do expect this one to keep falling longer term, because if I expand to the weekly chart, you can see we've got a massive range here. There's our equal highs. These are equal lows. Recently, we had a massive rejection at the high. So now I'm just expecting us to make our way back to that low there. And this to me looks like a nice place where we could pause, find the next lower high, and continue in that bearish journey. So I do anticipate a lot more downside for dollar CAD as long as we stay below it. If we start breaking above, then maybe we are going to push higher at that point. So if we are going to break above it, that will kind of invalidate that bias. But for now, we've had a nice rejection. Price has broken through the low here. On my stream early this morning, I said if we can get a nice retest of this, that'll be a nice place to short. But at the moment, it does look like dollar CAD is breaking above that. So I would suggest if we can see a nice bearish engulf from the 30, that would be a nice entry signal. If the market just keeps pushing up, then maybe it just was a big fake out. And if that's the case, if this was a fake out, then we're probably just going to continue back to the high for the rest of the week. So back to 1.361, 3615 by the end of Friday. So that would be pretty big there if this is just a big fake out. I mean, it makes sense because dollar has rebounded off that low. So if the DXY is going to see such a move to the upside, because we're really struggling to break through this low at 100.6. If that's the case, then yeah, dollar CAD does have that possibility to see a move higher, especially if dollar is going to be strong. But yeah, my focus would be on this level here. So far, looks like price is trying to break through, but I'll wait for candles to close. I won't judge on that open candle because a lot can happen in an open candle. But if that can close firmly to the upside, then yeah, maybe it's a big fake out and we're just going to continue to rally for the remainder of the week. I'll go through dollar, yen, and euro CAD as well. Do I find bias using fundamentals? No, I use technicals to find my bias, and of course technicals for my entries and my targets as well. I'm a very technical based trader. I do keep an eye on fundamentals, but my bias is derived from technicals. Okay, US 30. I'll go for some indices as well. Let me just go through dollar, yen, and euro CAD. So dollar yen, that one's seen some upsides. I'm looking to short dollar yen longer term. I do want to see a bigger retracement for it because we're coming off such a big low here. This swing low gave us this massive move to the upside. So this is definitely not a place which I would like to short, especially as a swing trader. I want to see the market push up a lot higher first, put that lower high in, maybe on the retest of this area there. Let's make sure we can all see that. Maybe in the retest of that area there. Of course, I'll make the call closer to when we're actually trading at that area. But the plan for dollar yen is, or my plan at least for dollar yen is, to see some upside, see a lower high, and then I'll look to see if I can short it back down again. But if I drop to the 4 hour, you can see we are respecting this descending channel pretty well. So I'm at least expecting us to push back to the high of the channel. Not quite there yet, so I do think there's a bit more upside in store. But just line it up a bit more precise. There we go. So we've got the high, now expecting another push a little bit higher up. So I think for dollar yen, if you're not already in the position, it's kind of a little bit long gone. If you're looking for another opportunity, there could be some sales as we approach the high here. So we'll see how price reacts. If we do see some nice rejection, that could be a nice place for a short and see that third lower high. 1, 2, 3, and then there's your short trade. So keep an eye out for that, but we're not quite there yet. So still expecting a bit more upside for dollar yen for now. In terms of euro CAD, not really a pair which I've been keeping too much focus on. It's not really doing much for me. Not really in an area which I want to get involved in just yet. We're not far off daily high here, to be honest. In fact, we may have just tested it a little bit, that wick area. So yeah, with EuroCAD, we have seen a lot of momentum and we could still keep pushing and we could go and take out that high there as well. The market is struggling. It has been struggling for a couple of days now, since the 17th. So it's been struggling here. Looks like it's trying to break the lower, but hasn't quite done so. I think if you're looking for some buys in EuroCAD, you want price to come a little bit lower. This area here would be interesting. We had a brief pause in the market where we consolidated and shot to the upside. That could be a nice place for a revisit, test of that, and then the higher low. You've got one over there, second over there, could catch the third for a nice swing to the upside. And you've got the high around 1.52, which is a nice big psychological level, which could attract price there as well. So not my favorite pair at the moment, not really a pair I'm looking to trade either. But I don't mind this move here. Lovely momentum there to the upside, taking out the highs there. So if you are going to see another higher low, let's look for a pullback, retest some structure here, and see if we can find a higher low on that retest. So yeah, something like that would look like a good opportunity. But right now, we're kind of just consolidating. Maybe we faked out the low of the consolidation. But if I'm looking to trade EuroCAD, I would want to see a bigger retracement. So yeah, that will be my analysis going to dollar CAD. Okay, we'll go through some indices. US 30, we'll take a look at NAS as well. Yeah, the 4-hour pound yen is showing hidden bearish divergence. Okay, you're looking at some shorts on pound yen as well. It's not quite ready yet for me. I need to see a bit more development there before I do get involved with pound yen, but I'm looking to short it hopefully sometime this week, if not early next week. Again, there's no end date for that. From India, I have a small account and I'm losing my money. Do you have any tip for me? Yeah, I would probably say that if you're not in a place where you know what you're doing, the best thing to do is probably not to trade in a live account just yet, or at least not with money you can't afford to lose. So I would suggest to hop onto a demo account and cut your losses, whilst you can, because the worst thing to do is just blow the whole account and just have to refund it again and lose more money. Then there's no point. You could have kept that money until you're more confident, until you actually know what you're doing and have a plan to work with at least. So yeah, I would say cut your losses, jump over to a demo account, become comfortable with your strategy and your edge before you do get to a live account. And if you are already at that stage, but you're losing anyway, then just lower the risk a lot if you can. If you can, lower the risk as minimum as possible, just to slow the bleeding. And whilst you find your feet again, then you can up your size. But yeah, if you're losing more than you wish to, either lower the risk a lot or stop trading and try and shift over to a demo account to find some confidence again. Anyway, let me go through some indices, have a look quickly. So NAS, what we're saying over there, US 30 looking pretty bullish. NAS, I like NAS. NAS, I think there's a lot of room to the upside for it, because if you look at the other major US indices, US 30 is already at its all-time high, I believe, and S&P likewise as well. So in terms of a swing trader, there's not much going on here in terms of opportunity unless you're looking to short. But in terms of buys, the buys already been said and done with. NAS, however, NAS is nowhere near the high. The high is all the way up there. So as a swing trader, this is a great opportunity because should we see some downside, that's the time to get into some longs, try and find the high low and see if you can ride it back to the high. Of course, now's not the best time either to jump in long as we approach the high here around 19,863. Not the best time to be looking to buy. But I think even intraday, there's some nice opportunities and some break and retest. Last week I was talking about retests here. Didn't quite happen. I think the retest here looks good. Hasn't happened yet, but still could happen. So I'll keep an eye on 19,574. But the idea is to be looking for those buys for NAS and trying to ride it back to the high all the way up there. Because that's what I do expect us to get towards. In terms of US30, where we're trading, not really too interested now. I'm expecting somewhat of a pullback soon, really, as we hit the upper end of this channel. Probably something like this at some point. S&P, similar situation. I do think we'll retrace at some point, but that's never a trade I will look to take myself. I'm never really looking to try and call the top on anything. I'm always looking to flow with the market. Yes, I do take counter trend moves from time to time, but under specific conditions and when probabilities are in my favor and there's a strong likeliness, we will see some sign of reversals. But for S&P and US30, these guys can still have another 2-3 bullish days here. So it's difficult to call the top, and it's difficult to buy as well because we've just created some new all-time highs. Now's not the time. But NAS though, that's got a lot of opportunity. I like NAS. What's up, Bob? Welcome to the stream. So yeah, I just went through US30 NAS. NAS I like because it's got a lot of upside. It's got a lot of upside, got a lot of room. Of course, maybe not now as we approach the high there, but I do expect it to get all the way up here, which is around 2739. So I like NAS because of that upside potential. But obviously right now, approaching some resistance, so you probably want to hold off a little bit. But some buys in the break and retest of that range could look very good, especially with some intraday opportunity, intraday entries, because then you can maximize your risk to reward. Okay, I'll quickly go through DXY. What about using fundamentals? Yeah, I'm a very technical trader. All my decisions are based on technicals. I do keep an eye on fundamentals and news releases, but in terms of my trading decisions, that's all based from technical analysis. Manzondi, what's up? Of course, you're welcome on the channel. Of course, you're welcome. Everyone's welcome. Everyone here looking to learn, improve their trading. We're all here on the same mission. So, of course, you're welcome. I'll quickly have a look at the DXY and I'll go over pound yen. But yeah, the DXY, as I mentioned earlier, is testing critical support. It's in a range, really, the DXY, the dollar. Equal highs there, equal lows here. So it does look like to me the dollar can see some upside here. And if that's the case, I expect it to push to the high of the range, which is around the 101.8. So there's a good likely chance that we will see USD retain that bullish bias, retain that bullish momentum till the end of the week, or maybe even going into next week even. I don't think we'll be trading at this level by Friday. So yeah, probably into next week as well. But we could see a push to 101.8. And if that's the case, that means pairs like Euro USD, that will be pushing down. Pound USD, that will be pushing down. NZD USD, that will be coming down. USD CAD probably pushing up. Dollar CHF likewise. Aussie dollar down. Gold probably down as well. Silver down as well. So that is quite a critical move there for the dollar, and potentially the indices as well could see some downside too. But it does look like dollar is trying to push higher here. I'd wait for this candle to close, but at the moment it looks really bullish. And if we can close similar to how it's looking right now, that would probably take us to the upside for the rest of the week at least. I'll quickly go through pound yen to wrap things up. So yeah, pound yen, I'm looking for shorts. We're seeing some nice rejection there. Let's see if we can keep that up. I'm looking for some entries in the 4 hour. So I've been waiting for my 4-hour bearish engulfing candle. Now this 4-hour candle just kind of opened up 45 minutes ago. So I'll be waiting for the next 4-hour candle closure, which is in about 3 hours time. But yeah, at the moment, nothing there, but it is reacting with a nice area. So I will keep an eye on some shorts. But that does bring us to the end of my segment. I hope you guys have enjoyed it and found it useful. I've enjoyed my time here. Appreciate Nick and the team for having me on. But go check out my channel, guys. If you have found it useful and want to see more of me, go check it out. Yeah, guys, I'll catch you all next week.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good day, guys. I hope you are doing great. So yeah, we can just go straight to our analysis and see what's really happening. I hope you did see that the rates went quite lower. They did cut the rates with 50 basis points, which is very great, or we can say we welcome that because we've been waiting for the rate cuts. So yeah, on the comment section, just let me know what pairs do you want me to check. I will be checking that. So yeah, at the moment, I'm actually on a dollar index just to see what happened. It seems like the market is still trying to digest the rates cuts. The market is still digesting that. Yes, we expect the dollar to get weaker, but it seems like that is not really happening that aggressively at the moment. So because we can see that we are coming from this nice uptrend, now obviously this is a downtrend structure. But where we are, I can say the market is actually consolidating. You can see that the market is actually consolidating. We're coming from that breakout, and now we expect the market to continue. So yesterday during the news, the market tried to break here, but the market failed. So maybe the market wants to go back to this resistance before going lower. That's why we don't really see much of a movement on other pairs which are going with the dollar. Mostly we were expecting to see some aggressive buys, but yeah, we saw some weakness in there. But I think maybe the market will keep digesting on that, and maybe in a month, 2, 3, it's where we're gonna see some bigger moves. Plus, the conference that they had, it was like very important because still they did not really specify how are they going to cut on the next sessions. They just said they will be data dependent, so which means they will wait for CPI, NFPs, jobless claims, all that before they say, okay, we're gonna cut with 25 basis points or 50. You see, so at the moment, yes, we can play safe. At the moment, I think that maybe the market might try to go on this resistance before we see a proper push. You see, so yeah. Now let's go. I see someone said check gold. I will start with gold. Gold tried to play games yesterday, guys. The market was moving very nice, but let me just go. I think on 4 hours time frame, it's clear. So what's really happening here is we are on a very nice uptrend structure, and the market was on this highest level, and it's obvious that we were expecting to see a proper push to the upside. We were expecting to see a very nice push, but you know what? That did not really happen. The market tried to break out, but the market failed. I think maybe it's because of the conference. Maybe investors thought otherwise and say, okay, it seems like things are not really bad, you see. Or maybe the market is waiting to react after. But what we have here, we can say we are still on that nice uptrend structure. We can identify, you can see, we already see that as a nice resistance. On the bottom side, we can say this is a proper resistance. It's where the market gave us a proper reversal, but I still believe that the market might reach this previous resistance, this area, before maybe we see a proper push to the upside, you see. And it's surprising because with that 50 basis point, sorry, I thought maybe we were going to get like aggressive move to the upside. So, or maybe that will happen after once everyone forgot, then I think the market will keep pushing to the upside. But it still shows that even though they did cut with that 50 basis points, the dollar is not really that weak comparing to this other pairs, you see. So another pair that I should check, USD gold and NASDAQ. Okay, so I will check, now I will check actually NASDAQ. NASDAQ also did the same thing actually, because let me start here on NASDAQ. I'll then go a little bit lower. So on NASDAQ, we have a very nice structure, by the way. So the market was around this level. Let me remove my notification there. So what we had yesterday, it was very nice, but the market actually did not really move the way we wanted at the start of the news. So we had a proper resistance and this proper support. Then the market tried to break out there, and few minutes later, or let's say a few hours later, the market reversed, touched our support. Then after that, until today, we started to see the market trying to reverse. And to me, I can say, yeah, that's good. That's good. But it seems like the market was not really impressed that much. We know that mostly we get NFPs, CPIs, which moves very crazy, but FOMC was not really that much. But today we saw some very nice reversals there, and the market started to go to the upside. I thought maybe once the market opens here, I was going to see a proper push to the upside, but it seems like the market is going to reverse. And if the market is going to reverse here, let me take this one out there. If the market is going to reverse, this is going to be an area that we are going to actually focus at. You can see this level. It's where the market was creating these resistance levels. So maybe the market will touch this level before going higher, or the market has to create something like a resistance that we can easily identify before we look for some proper buys. Do you see that? But beside what we have now, if we can just focus on the fundamentals that we got yesterday, I can easily say, yes, the market will continue going even higher. We are on a proper uptrend structures. You see, we are on a proper uptrend structure. But what I know is, even though we are on a proper uptrend structure, one way or another, the market will have to reverse along the way. But at the end of the day, the market will slowly continue to go to the upside. And I'm expecting to look for that buy. So I think we're going to have some very new highs. We're going to get some very new highs along the way. So I think something like that will actually work very nice. I think we are going to go back where we were. I think it was around July. I think to 20,800 there, or 20,700 something. So I think we're going to go back around that level. I think it's going to be easier. It might not really be today, maybe tomorrow, or maybe next week, but I think we are going to go back there. I hope that makes sense. So let me check the other one. Cedric, thanks, man. Existing home sales in 7 minutes. Okay, thanks for that. So US 30. Okay, let's go on US30. US30. Okay, US30. So on US30, guys, I think let me just show you this on a daily time frame so that you can see what's really happening here. The overall structure, it is still, you can see that we are coming from this aggressive bullish move. We're still on that. You can see the market is still going higher. But along the way, the market has to do what? The market has to reverse. So regardless of fundamentals, one way or another, the market will reverse. Why? Why is the market reversing even though we have some very good news? Because sometimes the market goes to a point where it's quite high, and for investors, those areas are very good for profit taking. So investors will be taking some profits, and it will force the market to actually sell if you're talking about USDT and Nasdaq, right? So on this daily time frame, we can see that we had this resistant area there. The market just broke out. This was a quite stronger resistance, and it means that after this area, we expect the market to continue very nice. I think you can easily see that we are continuing with that nice uptrend structure. So if we can go on 4 hours time frame, it's just a continuation of what we saw on a daily time frame. So this is what we have. You can see that the market broke. They were quite big. It might seem like a smaller structures, but let me try to make them visible nicely so that we can call a resistance. The market is struggling to break that. I think this web thing, it's quite a bit slower. I think, I don't know if maybe my resolution is quite high, but I hope maybe on your side everything is clean. So on US30 here, we had this breakout. The market broke out, started to struggle here. We can see the market was consolidating. So we have some areas like here, the market is struggling to break out of that. So should you buy? Because we're saying everything's fine. The rates are lower for now. Yeah, it depends. Even if maybe the rates are lower, wait for the structure, wait for the market to break out of that resistance before you jump in. Or maybe wait for the market to reverse a little bit. Maybe the market might end up touching this level again before we go higher. You see, why? Because now these are the new areas or new zones where the market is trying to test along the way. Yes, the market is positive, but sometimes it's going to be way too easier for the market to reverse because everyone is just enjoying the profits. Once they cut their profits, the market will even sell, even though everything is quite positive. We've been talking about rate cuts, and we like that. But if the market is way too higher, we can call that overbought. We tend to wait because, remember, we have to buy low. We have to buy when the market is lower, and we have to sell when the market is higher. So which means, yeah, don't expect some crazy moves here. So people, they will just try to go slower until we get a nice reversal before we see a proper push. But once the market breaks this resistance, it's also a very good area for us to look for that buy. You see. So now let's see, which pair do you want me to check? I saw gold, Nasdaq. I think I did all of that. I see a question there. Kenzo, what do you do when you are in a drawdown and a losing streak? Sometimes I can say you just stay out of the market because one way or another, as a trader, whether you are good or bad, you will reach a point where you have this continuation, like maybe in a month or let's say in a week, or where you get these losses. You try your best left and right, things don't just work out, you see. So yeah, I think that is part of trading. Not only trading, let's say it's part of business. Even businesses go through those seasons. You see, for me, last month, I think it's August, July, it was like seriously bad because I think the market was just moving crazy. So along the way, you get those losing streaks. But the best thing that you can do, I don't know if it's a good advice, but I think it's better to stay out. Or if you don't really want to stay out because you already addicted to trading, or let's say trading is your job, you can just lower the lot sizes. If maybe the losses are continuing, but they are reasonable. You see, if maybe, for example, let's say you're opening with 0.50 lot size, you can reduce maybe to quite smaller, something that is not going to hurt that much. You see, so I think that it's something that we can't skip or run away from. But along the way, it happens like not like every day. So which means at the end of the day, you will still be profitable, because those things doesn't really just happen now and then. You see. So I hope maybe I answered your question. Yeah, losing is there in the market, but just try to stay out, lower the lot sizes, and I think the cycle of that losing streak, it will change. So any pair that you want me to check, NSD CAD. Which one is that one? NSD CAD. I don't know that. Cool. Okay. Do you have the job bookings? USDJPY. Do you have IRL job? Okay. Not really. I just have some smaller businesses, but not businesses, smaller business. So actually, I'm a full-time trader, and it's very stressful because if maybe you are still new, or even if you are not really new, if your business is not really performing very well, that is obviously that will be stressful. But that is part of business. Even Apple, Microsoft, Amazon, they lose money along the way. So that is part of the game. So just make sure that you, at the end of the day, you understand what you're doing, and you know that I might lose today or tomorrow, but at the end of the day, I'm still going to recoup whatever that I've lost, because I have a proper trading plan. I have a strategy. You have everything. So even if you have everything, sometimes things won't go the way you want. But that will help you to be focused because you have the plan. So I see USD JPY. So USD JPY here, we are coming from a very proper, aggressive, by the way, bullish move there. And things started to change. We see a breakout there. So this is still a very fresh downtrend. So which means at the end of the day, we will still expect the market to go even lower. So we can maybe change the time frame there and go on a 4-hour time frame just to see what's really happening. Let's zoom that. So this is supposed to be here where the market broke out. So at the moment, let me remove this. So at the moment, I can see that the market is slowly going down, or we can say the market is now downtrending, as we just saw a breakout there. So I'm expecting to see a continuation of that sell. But remember, the market just broke out there maybe 2 weeks ago or a week ago. So most likely, once the market breaks out, it won't give you a clear move, or which means the market will just go up and down. At the end of the day, you end up losing, even though you know that we have a breakout and the market is supposed to continue with that downtrend. Plus, US just they did cut their rates yesterday, and which means the dollar is a bit weaker. That is good for someone who will look for a sell here. And actually, I can say for a bit long term, as JPY, I think tomorrow they will be increasing their rates. So which means this will create imbalance, which means the dollar will be a little bit weaker and JPY, it will be quite strong. Beside that also, we just had a breakout. So we're expecting the market to continue going even lower. So we are on a downtrend structure. So we expect the market to continue going down, to go down. Yes, along the way, the market might reverse here and there, but we still expect to see a continuation of that downtrend structure. As you can see that we are coming from a very strong bullish move. I hope this makes sense. So yeah, I'm expecting to see something like that in a long run, maybe let's say going towards month end, even further. because this time frame, these trends can last very long. So another one, zero sum game. YTI, US oil. Okay, I will check that. I think this question is not really, what do you do if the market comes to a resistant zone? So it depends. Let me show you something. So if maybe we are here, trying to answer that question, what do I do if maybe the market is coming towards my resistance? So it will depend. Are we on a downtrend or an uptrend? So if maybe we are on an uptrend like this, it's I won't do anything, obviously. Why? Because I'm expecting to look for buy positions as the market is going up. So which means I will wait for the market to break out before I jump on another buy. But if maybe we are on a resistant, when we are now on a downtrend, you can see here we expect the market to go lower. So that will be a good idea, a good chance for me to jump on a sell once the market is bouncing away from that resistant area. I hope that makes sense. So it will depend, because I think maybe your question is not really, I think you can maybe explain further what you mean by that, you see. So YTI and AUDCHF. Okay, on an uptrend, I will wait for the market to break. I won't do anything. I will wait. Let's say maybe we have a resistance like this. I will wait for the market to break this area, this resistance, then I can buy above that. So yeah, I think once the market breaks out, we're looking for a buy if we are on an uptrend, but it will depend. What resistance are you talking about? Maybe you're talking about something like that, or maybe a horizontal one, a diagonal or resistant, a horizontal one. I don't know which one you're actually trying to explain, but I think mostly it's just going to be like that. So let's check US oil. I think US oil, it was trying to recover, guys. US oil, it was trying to recover. So on the comment section, just let me know which pairs do you want me to check. So I think here the structure is quite straightforward, even on a daily time frame. So on a 4 hours time frame, guys, we are on a very nice downtrend structure. The market is on a downtrend. So we expect the market to do what? To continue going even lower. But it seems like we reached this lowest level here. So there is a chance that the market might break out of this resistance area and start to continue to go to the upside. That is possible, you see. But since we are on a downtrend, we're not going to talk about that, because what I'm talking about here is it's understanding what is happening now. We reached the lowest level, which I'm going to show you. So if maybe the market doesn't really respect this area, which it was a support before, so it means I'm expecting to see a continuation of a sell. But as I said, we reached this lowest level. Maybe there is a chance for the market to touch this area, continue, or maybe to break out. So let me show you this level on a daily time frame. So on a daily time frame, it's something like this. I hope maybe you can see this nicely. So on the US oil, we can see that the market did reach this. Let me change this color, guys. The market did reach this level. Do you see that? The market reached that zone. We can see several times there. This one did not really touch that exactly, but we can see that it's actually around the same zone. So there is a possibility for the market to do what? To push the upside, even though we are coming from this nice downtrend structure. So once we zoom in, it's where you will start to see that, oh, we're coming from that level. We are coming from that downtrend structure level, but anything can still happen as we are on a downtrend. So we might see the market respecting this area there and start to go lower. I think I need to make this a little bit thicker so that we can touch these levels here. So this is the lowest area that we touched. So there is a possibility for the market to touch that level. I hope that makes sense. You see. So let's go. Let's check other comments. Let's check other comments. Let's see. I think maybe I did not really see something. I see someone was blocked there. So AUDCHF, I will check that. Why my chart different? Sometimes if we use different servers or let's say different brokers, that might be different. Gold, please. I think I did check gold. Okay. So let me check. Let me check what gold. Let me know what pairs do you want me to check, guys. What pairs do you want me to check? I will be checking that. I think we did check gold, but I will go back there and try to see. Oh, AUD, because I'm trying to check several comments here. I just see some people say that one was wrong. I don't know what you're talking about. Okay, AUDCHF. Okay, on gold, gold seems to be confused, guys. Gold seems to be confused here. Maybe we reached the highest level, maybe because this is the resistance that the market is creating, and it seems like the market is struggling to break out of that. And at the moment, we were expecting to see some very nice push, but it seems like no, we don't really have that momentum. Gold doesn't really have that momentum. It's respecting this resistance area that we have here. So at the moment, I will expect the market to touch this level here, or maybe this lowest area. So this actually this low the other one here down here, this is going to be the one that I'm going to look at, because sometimes the market creates this fake support areas. At the end of the day, the market will go and touch the proper one. Quite similar to, if you can check here, we always have these areas. You can see this area there. You can see another one there. If you always try to take chances here, sometimes, yes, you can get it right. The market might reverse, but some other times the market can go back to the actual resistance or previous support, resistance. Now it's a support. Then the market will end up touching that and push to the upside. You see. So I think maybe that AUD USD. I think let me also AUD USD and also AUD CHF. Let me firstly check AUD CHF. I will go on Aussie dollar. AUD CHF. AUD. Do I have that? Let me remove this. AUD CHF. Then I will go on AUD USD. So let's see. Before, just because I don't really trade this much, I will try to clear everything here before I try to draw everything. I think I did analyze this before. So yeah, on a daily time frame, this doesn't really look nice. Let's see. Seems like the market has been melting for quite some time. So this seems to be a nice aggressive downtrend structure. Let's see. I hope this is obvious. We can see that the market, it's coming from the upside, something like this, going down like that. So on the bottom here, I think this is an area where the market also tried to touch. So yeah, I think this is a proper downtrend structure. But if we start to zoom around, I think maybe that it's also sort of a breakout. Let's try to talk while we draw. As long as they connect. Yeah, I think so. I think let's go on 4 hours time frame. Yeah, this is a way too bigger structure. So yeah, we have something like this. Okay, this thing doesn't really want to zoom out. It's fine. So I think a daily time frame is much better. So I have something like this. So yes, we are coming from a very proper downtrend structure. And now the market seems to be breaking out here. And now the market is going down. This might confuse because it shows us that the market was on a downtrend structure. And it seems like the market broke out. Obviously, once the market breaks out like this, you will expect to see the market continuing with that uptrend. But here, it shows us that the market actually reversed. When the market reversed like that, it means that this was not actually a fake breakout. This is actually an adjustment. Sometimes the market will adjust. Why? Mostly when the market is aggressively selling or maybe on a steep trend like that, sometimes the market might break out of this structure, go up, then continue with the previous trend. So this might be the case here. I think the market, at the end of the day, the market might start to continue with the previous trend that we had as a downtrend structure. Or maybe you can also see something here. This is a support area, previous one, by the way. If you can push that further, you can see that it still makes sense. So you can maybe wait for a breakout before you say, okay, let me jump on a sell or something. You see, I hope maybe that makes sense. So let me check something. I hope I'm not actually taking longer than expected. AUD USD, what's really happening? I saw USD AUD, it was flying, like seriously flying. Yeah, so this is what we have. Let me clear that. So the structure, the overall structure, like on a way too bigger time frame, it shows us that, yeah, the market is slowly going higher. But along the way, we had some downtrend structures. Like here, you can see that the market has been going up, down. But at the end of the day, it's like the market is just going like that. But since these are bigger moves, we have to treat every trend like that. So this is a downtrend, very quick one, by the way. And the market broke out. So on this one here, we know very well that they did cut the rates yesterday. That made the dollar to be a little bit weaker against AUD. So we saw the market flying. So I think we have something like this. We can mark this as a potential resistance, something like that. Or let me just use proper. Let me use proper resistance. Here it's where the market broke out. So now I think we can have something around this level. Let's try to check that on a bit smaller time frame. Let's see on a 1 hour. I want to see if maybe there is any structure that we can use. I think so. I think this area, it was something. It seems like the market used to respect that level. So what I can say is that might be a potential structure, but I will leave this here. If the market breaks out here, obviously I will try to stretch this support there. If maybe the market will be touching that, then we can go higher. But there is a possibility for the market to also respect this level before going even higher. So now you have two options. So is the market going to respect this level? According to your strategy, I think that will actually have to show you that. But on my side here, I think, yeah, there is a possibility for the market to respect this area as it was a smaller resistance before the market broke out. Now the market is trying to retest that. We can say once the market is bouncing back from here, you can say once the market is going far, I mean, from this area, let's say something like that, you can have maybe a nice buy pending order. I think that will be a proper reversal, you see. But it should be on a smaller time frame, obviously, like 15 minutes. So it shouldn't be here on the support. Wait for the market to reverse from that support area. So once the market doesn't really do that, I think the market will end up going even lower. So yeah, I think I reached my time. So yeah, thanks guys.
All right, Kenzo, thanks for all your help this week. especially with Nick gone. Yeah, we appreciate you coming on, guys. I've been putting Kenzo's channel in the description in the chat. So let me get my words out. Jeez Louise. There it is right there.
Okay.
I've done most of the work for you. All you gotta do is click the link, then click sub.
Thank you very much, man.
Like a half second. So, so Kenzo, thanks for coming on, and we'll see you next time.
Thank you.
All right, guys. We're gonna take a quick break, and then we're gonna be met with Chris Pulver, and he will take over the show. And here we go.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Thursday. Happy post-Fed day. Let me get the screen up here. All right. So P&L is looking good. Markets are higher. I was a little disappointed in my SPY trade because I was shocked. Let me just walk you through this. I closed out this morning. The trade that I posted yesterday, it was a 569 long call. Let me walk you through the life of this trade. So here is the SPY, and I placed the trade yesterday during all the chop. I saw this really nice gamma level at 570 yesterday. So I took a long call. It was a 569. So a 9:20 expiration, which is tomorrow. It was a 569 long call. It was $1.50 to $1.55 debit. Okay, that was the trade that I took in here. Now, when we came into FOMC yesterday, we had that fat finger buy trade, which not fat finger, just order flow jumped right out of the gates, and then we faded the entire move. At the peak right here, this trade was up to around $3.25 credit. Now, I didn't move the stop loss. I didn't protect profit. I didn't go to a break even or better. Had I done that, I would have been knocked out pretty early. And this was trading for about as low as 55 cents. So you're like, Chris, you were up $1.75, didn't do anything with it. You were down $1, didn't do anything with it. And then what about today when it's at higher highs? Yeah, I thought I'd be back up here towards $3 plus. When I got into live market today and it was opening bell, it was trading for about $3.10. So I was a little sad that being higher than this high by $1.70, $1.80, and I'm getting less overall premium, pretty disappointing. So I ended up moving stop losses. I got one filled at $3. I got one filled at $2.75, and then I had several other accounts filled at $2.55. So overall, it's still fine. I mean, the return on capital is fine, but crazy that time absolutely works against you as a long option trader. So that's why I typically sell options, but I thought it was a good trade. Still worked out. I shouldn't complain that much, but I thought, man, what a good move. Frank and I actually talked about it offline. Like, hey, your 569 long call should be looking good. I thought, yeah, I'm hoping I can get like 350 out of it. I thought it'd be better than what we traded for yesterday. With, we have all day today, all day tomorrow. I thought there's a little time premium still left in it. But as soon as market opened, it was trading around 310. So, and it's probably still trading for less than that right now. Let me look at it. So the 569 out to tomorrow is trading for 267. So it's right there. Like, it's not even back to $3. So anyway, the trade's done. It is what it is. P&L for the day is doing great. I'm up 26 grand, 25 grand. I'm just going to do some spot checking today. I'm a little skeptical of this high. And I'm not like bearish. I mean, Frank might be pulling in some bear call spreads and stuff, and that's totally understandable. I'm a little skeptical for a couple of reasons. I did some digging this morning, and found a couple of interesting stats. So after the market's reaction, stocks initially soared alongside gold, bonds, etc., before reversing during Powell's press conference. Now, of course, that's after the press conference. The reality was overnight, the futures market was really, really high. This was the NASDAQ futures overnight. So here's your, if I box this in, this is the Fed noise from yesterday. And you can see that pretty much after the market closed, it's like, yay, we're going up. And the futures market ripped higher all night. And you know, if you're a futures trader, great. But it's not the normal time to trade. It doesn't matter. I mean, it's up, right? So we're looking at, 2+% in the NASDAQ today, 1.5, 1.6% in the S&P, and everyone's like, awesome, we're at all-time highs again. But it all happened overnight. So here's the NASDAQ, here's the S&P, here is the Dow, and here's the Russell. All of them just like completely shredded those highs after the market was closed. I thought this was funny. This was actually the July 31st FOMC, and then just some red updates and slight tweaks and modifications, because it's pretty much the same thing that we had July 31st, but now we just modified a couple things for September 18th with the report in the Fed. We sat here and did it live yesterday. We watched it. It was an immediate reaction, and then everything else was pretty dead. It faded most of the move all day. But here's what I'm trying to take away from it. I'm a little skeptical of the high, because the last time that we had 50 basis points as the first cut, the market actually underperformed. So if you look here in blue, the 0.50 first cut, this happened back in 2001. This happened back in 2007. I know that's only 2 instances, but the market was lower with the 50 basis points cut. I also shared this week, and we talked about this yesterday, the average moves over the 1, 3, 6, and 12 months when the Fed cuts near all-time highs. Now, I obviously don't know how the market's going to be in a month or 3 or 6 or 12. If I did, we'd be 100% invested and we would have a guaranteed trade, which we never do. So it's obviously risk I'm trying to manage. I like the upside because it makes things easy, but I'm taking stabs and protecting the downside just in case something gets stupid. So sitting here yet again at all-time highs, gapping higher, futures market working all night. I mean, I will take this all in stride. I understand that a year from the Fed cutting at all-time highs, 20 out of 20 times the market has been higher 12 months after that cut. Okay. I could see us higher, for the next 3 to 6 months as we get into the end of this year, maybe get into next year to follow those typical seasonal flows. But I'm a little skeptical going into like the second half of 2025, simply because I don't know if we have the employment or the inflation to truly go the direction that the Fed wants it to go. The Fed says, we're trying to target 2% inflation. They stuck to that narrative yesterday. Powell was very explicit, closer and closer to 2%. I really don't think we're coming anywhere near 2%. I think that we will have inflation be sticky, maybe in the low 2s if we're lucky, but I don't see inflation going much lower than that. I don't know. We'll find out. But if the market senses that, the market senses a flare-up in inflation, the market will react. We'll see the stock market react aggressively. If employment data over the next 30 to 45 days before the next the November Fed meeting, if inflation data is better or employment data is softer, the market can obviously have adverse reactions there too. It was highly sensitive through July. It was highly sensitive from July to August when we had that, the carry trade unraveling in the end. We had a dispersion trade unraveling as well, and deleveraging. All these things were taking place. But right now, the market seems to have forgotten about it, and we're back up here to all-time highs, and it seems to be like the market can do no wrong. So I'm not trying to fight it. I certainly like watching my P&L grow. I wish I could just be happier and let it do its thing. But I'm not super aggressive. I'm just going to go through my portfolio today, and that's really what I'm doing, is kind of pruning and combing through and making sure, like, what else can I do? So oil's up to 69. So my 65 and 64 positions are good. I've got like a 112 on oil, as well as some credit spreads. My ES feed, this is going to be down because that was a hedge that expires worthless tomorrow. I have also out to next week, I'm doing that broken wing butterfly with the call side. I want to see if that, that should be it's a good payout potential. But I'm looking for a vol play on the the Qs and Nvidia. Gold 26.27. We're up to fresh highs again on gold. What a reversal that would have been. And of course, I'm watching direction here. Let me check on my SPX trade really quickly. SPX this morning, right here. Yep. Okay, just going to keep an eye on that. All right, let me put this away. Let's talk charts. Let's go to the daily. We'll take a look. Yep. So we are sitting here, gapping higher, fading to hit the FOMC high from yesterday, and then pushing higher. We're at 571 and change. Now I want to see what the SPY is trading for, you son of a gun. SPY right now for 520.
Hey, Chris.
There it is. What's up, Frank? Now it's freaking moving, dude. Now my 569 is trading for 340. You freaking turds. I'm so bummed.
How's your call going?
It's
at 340 now.
Yeah, 340 right now. It was as low as 240, 245 today. It was when it opened up. I thought we'd be much higher at the open since we were up to like 571 near the open today. The highest price I saw bid was around 310, and it faded, pretty quickly from there. But again, in hindsight, if I wanted to move a stop loss to break even and go to like 165, 175, now I'd be up, 100+%, and I could just sit here and manage my stop loss. But I closed out around $3, and then I had one account that closed out at 275, and then a bunch at 255. So I grabbed anywhere from like $1 to $1.50, which return on capital wise is fine. It's like 80% return on capital, 100% return on capital. I'm fine with that. But now all of a sudden it's like, oh yeah, there it is. There's the move I was looking for. And I mean, this is what's stupid to me, dude. How do we not have? We're barely above. We're barely above the opening price, right? Like we're barely above the opening price. And the difference is this was trading at 310, and later in the day, it's now trading for 350. Like you think that time premium would actually matter with that gap higher, but whatever, man. I'm just bitter. So,
well, does that mean that they're expecting it to move harder now?
I don't know.
Even harder than this morning? Because how would that work then? Because
I think
the premium.
Yeah, I mean, I paid for the premium. What we're getting now is we might just have like, since price is moving up this way, we might have like a gamma squeeze going to the upside, and might just kind of help improve the value of the trade. But I just thought with time, obviously getting time at 9:30 open versus 10:30, that we'd actually have the value be a little bit better. Whatever, dude, it doesn't matter. I'm not going to sit here and beat this up. It's like I'm out of the trade. But the good thing now is if anybody in my Discord that I posted for our trade signals, I put option 1 is you look to close it at the open, take your profit. Option 2 is you move the stop loss to break even or better, and then just look to manage the stop loss. And it's so far option number 2 is working. But having said that, as Frank and I are on here for the last 30 seconds, this has also dropped about 30 cents. So it's going to be sensitive. I mean, I'm out of the trade. So if I had this thing at $1, I bought it for $1.55. If I was going to say in a perfect world, if I just move my stop loss, so this is where my debit's here. Okay. And then if I go to, let's say I move my stop loss to $1.75. So if I move my stop loss here, I still have to realize like I might only walk away with 20 cents profit on this trade. So if I moved it up to, let's say, $3 and get it locked in, I'd like to see it, but I know it's sensitive. I mean, this could easily drop back to $3. This might somehow rip higher, but whatever, man. I'm not chasing it. I'm doing some other exploring today and some other stuff. So Frank, what I thought I'd be doing is I'd like to talk through some stuff with you. I'm just going to be kind of pruning and plucking and picking. I want to check on a couple of things today. I do have some expirations I need to be mindful of. Baidu. We're at 86, and I think I have a 90 by 80. That's a credit spread that I might be taking additional assignment on. I want to own more shares of Baidu, and I'm totally good with that. So let me just double check on my accounts here for Baidu. Let's go here. So if I go each account,
I have some ideas today.
Okay, I want to hear those ideas. Let's go. I'm gonna go ahead.
Looking at SPX. So
okay,
what are we up today? We are up almost 2%. A 2% move would be around 57.30. So I'm eyeing the 57.40 level for the day and seeing where price ends up midday.
Okay.
So if we sort of run this far up to the upside, I'm thinking we could be capped there, at least for the day. So I'm debating on taking some like selling credit spreads up there, letting it expire. That's what I did yesterday.
Okay.
Some credit spreads pretty late in the day. I was surprised I got them filled, and they changed pretty drastically, but ended up working out. Selling the volatility yesterday was good.
Yep.
And I'm glad that I didn't go till tomorrow, because that would be today, and we completely, we broke out of every level,
Right.
hitting all-time highs. I think the market's excited for a better jobs market now that there's 50 basis point cut. I think maybe they're pricing that in now. So I don't know. I'm looking at stocks and wondering, like, so I think upside is limited, but then we jumped almost 2% today on the SPX.
I know. I know. I mean, it's up. I mean, the futures market ripped all night. I mean, the Qs are up almost 3%. Nasdaq 2.83. It's like, okay. I mean, look. That's what I'm saying. It's like I shouldn't be upset, and I'm not. But it's like I'm just skeptical, And so I'm so exhausted of, like, I gotta be. It's like I'm not bearish. Okay. All I'm doing is that's like I think it is in my best interest to take very inexpensive hedges, just because if something if something silly happens with this market, like flinching, we could have a 2, 3, 4% down day. We could have a 3, 4, 5% down week. We've seen it. We saw it. The 10% dip to the downside from July to August. We saw it from post Labor Day. I mean, the end of August to that post Labor Day drop was 4.5%, 4.25%. So I mean, we know the downside can be there, but what always ends up happening is also momentum begets momentum, and there's probably more buyers at these highs, and even if it feels like the risk is to the upside, not to the downside, the risk is to the upside, because it's like, how much higher can we stretch? How much frothier and rich can these valuations get? We're not even through earnings season right now. We might have another, Q3 earnings might still prove to be like really profitable, and margins might be good. Forward guidance might be better. The landscape might change. Think about the optimism that these earnings reports and transcripts might throw into the markets. They might be so optimistic that the Fed is finally cutting that it looks better for them, and all of a sudden their forward guidance is up. And like, dude, this market might go into pure euphoria. And it doesn't matter about the election. The employment data comes in, as you said, if it just improves, the market's going to take that as a positive, and inflation's trending the right direction. And yesterday with Powell, it's like he was pretty vocal on, like, hey man, inflation's going the right direction. I think that right now they get some free mileage out of inflation talk, because it has trended from 2.9 to 2.5 is a big leap in the right direction. I still don't think we get sub 2. I don't think we get sub 2. I think we're gonna stay. If we get to, like, 2.4, 2.3, 2.2, great. But I don't know, man. I think the market is gonna sniff this all out later, not now. I think right now it's like it's too good. It's too good to fight it. But it doesn't come without knowing that there's some serious downside risk in case something turns sour. So, like I said, I'm just trying to stay out of my own way. Obviously, I'm up, nearly $30,000 today, and I'm like sitting here being a curmudgeon, like, oh, whatever. But it feels weird, and so it's fine. Like, that's what I'm saying. I'm not trying to do anything bad. It's like I might have a couple stocks getting called away this week. I get a sign on Baidu. That's fine. I want to own that. China's come back in a pretty nice way. China is finally showing some signs of growth, which is nice. The HSI is up 6.15%. Go to KWeb. This thing's up off the lows as well. This is a large cap tech that's up 8%. Go to FXI, which I own some shares. We're up here at 26.98. I think I'm getting them called away. I actually going to check this right now. I might actually roll these. Let me go to FXI for a moment. I might roll these because I do have them. Oh, it's out to next week at 27. So I'm right here at the call at the level. I'm only in for 100 shares, so rolling this isn't a big deal. but I think I own my shares. I'm going to repair this for maybe like $3 or $4 a share. So I'll make, a few $100. I'm up like $4 grand right now in FXI, and I'm fine to keep that. If it gets called away next Friday, that's okay. Actually, it's on Monday. It's a Monday expiration for that covered call. And then I have a naked put out there for one of my accounts as well. And then what else do we have on? So my China stuff, I've got some Baidu and Baba. Baba, I have a 250 by 80 credit spread. That all expires for profit. I'm up about 9 grand on Alibaba with a lot of these credit spreads expiring. I also have 65 by 40s wide credit spreads collecting, $2, $3 a credit. My long calls here, let me check here. Long calls at 60. These are out to March or Q1 of next year. Let me take a look at this one. Let me just go into one account.
I think I might have another reason to hedge too, at least in the short term.
Okay. Debits.
So tomorrow
debits.
is the triple witching.
It is the triple witching. Thank you for reminding me. That's the dose of reality that I need. Yeah.
I don't know if like obviously the market is defying everything. I mean, look at this. It closed down at 56.15. It opened up at 5,700.
Yep.
That's almost 100 points or something.
That's a big move, man.
So I know, like, I'm always cautiously, I guess, bullish. I always sound like a bear, though. But I do think that if we go overextended like this in such a short time, it could be euphoric, but we have like, what is Monday too? We have triple witching tomorrow, and then Monday is something else.
Next Monday shouldn't really be anything. It would be the following week is going to be the end of the quarter. So if we get through triple witching, we just have 1 week. I don't think there's any major new next Monday. If we go to,
I think it's got to be at least like some limited volatility to the upside, at least for the rest of the week.
Yeah, we have PMI. All we have in the U.S. is PMI data coming out on Monday. It's services and manufacturing PMI at 945. We have Eurozone PMI as well. Rate decision out of the Aussie, but I don't see anything Monday. But the following Monday, the 30th, is going to be end of quarter. So 27th is the last full trading week of September. The 30th is end of quarter. So, I mean, I don't know. I mean, what I would say is, I noticed some interesting things. Like anytime we've seen the market start out rough, this is kind of interesting. So you mentioned that triple witching tomorrow. I think this goes back to 1980. Anytime that we have seen the market start off September red within the first week, 10 out of 10 times in history, it is finished red. So I do wonder, like, this might look good today, but I do wonder with that gap, it's like, is this ripe for the bears to just come back in and fill? Is there any momentum to the downside to give us, think about this, Frank. We talked about this the last couple of weeks. Wouldn't this be the classic broadening pattern right here? If the market heads up and tops out, and then the market heads down here, we get this big, fake out to the upside. That's why I'm a little skeptical, dude, is I could just see this being a fake out where this is getting everyone to jump in and get long, and the market's just going to turn, even if it's short term. But if it turns and fills the gap and has some momentum to the downside, I could see that. Like this could all be just a big old freaking fake out. So I'm not, I don't know, man. I'm not biting. I think it's nice to see the P&L go up and everything melts up higher. If it does, awesome. All I'm losing are like little 0.1s and 0.25% along the way, like every 30 days with hedges. But I don't care, because if I'm up, asymmetrically, I'm up 10, 15, 20%, I'll give back 1 or 2% in total to make sure I've got some protection to the downside. So, but you're right.
Like
Tomorrow's going to be an interesting way.
S&P up here. Yeah, we see it up here. That's when it's hard for me to decide whether to buy or not. And I know deep down I want to buy some more. My Oxy, Palantir, SoFi, they're all doing well. I want to buy the S&P right now, but I just have nowhere for it to go. Like, I don't have a target for it. There's no highs. This is the high. So
yeah,
would I find more probability to the downside is how I'm feeling right now. So I don't know. I think I'm just going to focus on those credit spreads just because I don't think that we can go that much higher today. And then tomorrow, we'll see. But I'm not necessarily bullish on a triple witching day.
Agree. I actually might look at this today. Let me see if I did a SPX. So, and I hate to sit here and say I'm going to call the top in the SPX, but I mean, if we have a stretch, look at just from a sheer percentage, it's like we already have an outlier move. We're already over 1% from yesterday's close to today's high. It's already stretched out about 1.9%. If I can put what's 3% here, I might look at putting like a bear call spread in, go 3%. If we get to 3% today, that'd be around 57.85. It's probably trading for nothing today. Let me see, 57.85. I'm gonna go SPX. All right.
Yeah, that's like 15 cents.
Yep. So around 10:45 a.m. Got it. All right. Okay, I gotta make a note here and something real quick. Yeah, let's look at that. 10:45 a.m. Eastern time. SPX cooperated with the K. All right. So 57.85 on the options chain. Let me clear this. Option chain 57.85. I mean, you're getting nothing for this right now. If I sold the 85, buy the 90. I mean, I'm not going to take the trade for 5 cents. Obviously, I would try to get this thing for maybe 50 cents or $1. And that way, like, price would have all this room to rip to the upside. Right now, it's trading at a 98% probability. This is a 1 delta. So I don't think this is going to fill today, Frank. But if I were to say I'll put in a pending order, probably what I'll end up doing is, I don't know, man. I'm going to turn this into a broken wing. I'll take a silly little trade here. I'm going to be a Bob Ross and take a silly little trade on the silly little SPX. Happy little accidents. Let's do I'll do a call fly and move this thing down to 57.85. So I'd like to kind of pin it there at that 3% level. It's not going to fill right now. I'm going to put this as a pending order around $1, and price would have to just absolutely rip to the upside today to get this thing filled, and that'd be a 3% high and a profit trap for me. So if it works out,
what is the biggest day on the S&P
this year?
3%?
Ever?
Has it ever gone
2%? Oh, dude, like we had like 10% days. 2008 financial crisis, some of those big up days with crazy high volatility, we had some swings like 7, 8, 10%. I mean, I don't think I'm wrong. I think we've had some crazy moves. Remember that study where it's like, if you were not invested trying to time the market and you missed out on the biggest days, you miss out on, I mean, the performance over those days and years have been insane. But what is the biggest one-day performance for the S&P? This shows that the biggest move ever was 122. Thanks, AI. You guys are stupid. Let me find out. List of largest daily ranges. I don't know. Wikipedia. Maybe Wikipedia has it. There we go. How about a 16.61% change to the upside? It's pretty big, right?
Okay, but that was in the financial crisis. So when stocks were already tumbling.
They all are. They're all going to be that way. All the big moves are going to be in turmoil and crisis. All of them, right? 1929,
and
1933.
that's what we're not in now.
I understand.
So do you think we're going to even? Yeah, I'm just saying, like, if we go up to 57.30, I just don't think it can go much higher on the day. Not overall, like in general, but just on the day. I don't think today can go past or much past 57.30 because, let's see, a 3% move from here, 57.80.
Yeah, that's from yesterday's close. I mean, look, the odds of that getting filled are slim, but I'd rather have a broken wing butterfly than just a credit spread, because at least a broken wing butterfly gives me a payout potential. So I'm going to put the trade in. I'm going to try to get filled. If I get filled for, let me see what 50 cents looks like. 50 cents would give me $50 of tail credit. It'd give me a max profit around $500, but my risk is $500. But I'll see. I don't think it's going to get filled. It'll expire. It'll cancel itself out at the end of the day. So let's find out. I'll try it. So let me throw this in here. And
why not just do like an AM call for tomorrow at 5,800?
Because what if we gap up another 2%?
That's what I mean. Your call would be worth a lot.
Oh, you saying you just want to do a long call?
You just did an out of the money call, a cheap play, focusing on the potential 2% gap up.
I mean, I'd rather do an out of the money put at 561 and see if we fill the gap tomorrow just for fun. That'd be dirt cheap. Not an AM. I'm not doing an AM expiration. If I did I could do a 561 put for tomorrow for 50 cents. I'd rather just trade it intraday. I'm not gonna guess, dude.
You're looking at SPY 561.
Yeah. I mean, I could do SPX, but SPX, not AM expiration, but what's our if we have a gap fill, that'd be 56.15. Yeah. I don't know. I'm up a decent chunk of profit this week. I'm like 7 for 7, 8 for 8 in like income trades this week. P&L's up. No, I don't know. I'm good, man. Like for right now, I think it's more important that I go through my positions. I, pluck and comb and figure out like what I can finesse. Like right now, I know that I can make a lot of extra money on Pfizer. If we get called away, so Pfizer might be worth one more roll. I think I talked about this week. I've got a 10 contract call at 25, and I'm getting it called away this week at 29.50. My overall Pfizer position should be like 17 or 18,000 bucks right now. Let me find out here. Pfizer up about 18.8 right now. So if it gets called away, that's pretty good. Pfizer going into next week. So here's what I'm debating. I'll just walk through this trade really quickly. So the reason I'm even interested in this one is because it's essentially a diagonal spread. I bought the 25 call. I'm selling the 29.50. I've been basically selling and rolling and selling and rolling. And so my cost basis right now is like, it's only like $1 and change on my long call because I've netted the debit lower. So if I were to roll this, if I wanted an extra week, if I go an extra week and keep the strike the exact same, I can get 19 cents. If I roll it down a strike, I can actually still get. I'm only going to net like 7 cents more. That's not a big. I'm not going to do that. If I had the confidence that Pfizer could stay above 29.50, which it's a resilient stock, I don't think it's necessarily dropping. But to get an extra $200 and go out for a week, that's not bad. What I'm trying to avoid is, it's up $19,000 for me to just say like another week here, another week here. There's time sensitivity where it's like if Pfizer, let me just take a look at the stock. If Pfizer, which I do believe the stock has room to run, but we're not at highs. Like highs on Pfizer at 31.50. If we're stalling right here, I can always get back in. We're making higher lows. I'd like to see this stock finally start to take off, but I'd almost rather play like individual credit spreads, put in some more ratio spreads, do something different than play with the time factor in my diagonal spread. So anyway, I think I'm just going to let it get called away. I know I'm going to take some assignment on Baidu. I think I've got a 90 by 80, and I'm going to take some assignment, own it around 87, and finesse that trade for a couple of bucks. I still like China. I might be the only one, but I keep talking about it. And then some other plays. What else did I have on my to-do list this week? Let me find out. So here we go. My to-do list for this week. Oxy. I've got to manage some long puts in October. My SPY, Qs, NVIDIA, those are out to October. We didn't have enough volatility on any of those to be interesting yet. So my 562 cent are up about $8. Let me see if that's got some time premium in it, Frank. Let's have a look-see. SPY. This is October 4th. This one should be in profit. I've got 10 contracts there. Let me see something. SPY. I've got a 565 by 564. That is. Oh, that's the part. Is that part of the? What the hell is this? Oh, that's a debit spread. Never mind. All right. Let's go to October 4th. 1, 2, 3, 4. I paid $960 for the debit, and right now it is trading for $960. Not going to close it. So we might as well rip higher. This trade is. Let me close it. Let me look at it. So I took a 40-cent debit. All right. Anyway, so that's what I'm doing today. What else do I have on my list? Futures feeds. I've got some hedges mainly on futures. MO that was pulling back after the dividend. We're down to $50.34, which means this is pretty much coming back to all my call levels. I got $50 covered calls, $52.50 covered calls. Pfizer, I've got the 29.50s. FXI is at 27. So maybe I look at potentially rolling one or two of those. The rest is I added BTI this week, and that's pulling back as well. I'm looking at that's British American Tobacco. It's a dividend play. I'm trading a lot like one of my bigger performers this year was MO, and MO is now $50 instead of BTI being around $37. But it had the same type of growth. It has a similar structure where COVID lows building off this level at $30. I think this is just a good solid defensive play, dividend play. I'm starting to look at some of those boring stocks just to accumulate and get some dividends, play a little bit of defense in case we're I don't know. I think everything is great. Like this is like the Mike Tyson quote, right? Like everyone's got a plan to get punched in the mouth. I'm trying to duck and weave and make sure that I don't get punched in the mouth. So if I never get hit and the market keeps going higher, great. That's the easiest thing ever, is just to let the market rip higher. But I do not want to take a punch in the mouth where it's like one day, 1 week, one nasty spill that just rattles everything up. And I don't want to do that,
Yeah.
So, all right.
Let me see. I'm wondering if you could, if doing, I guess, a debit spread in the money for like a week out.
For what?
On the S&P.
So SPX?
Or maybe like SPY.
SPY.
And so doing something that's like kind of spread out.
Okay.
Maybe like a 570 by 580 or something for next week. And then
570 by 580.
And then selling credit spreads at 580 for like a couple days out while you're doing this vertical strategy.
So what do you want to do? You want to buy the 580 and sell the 570 or 70, or you want to do like a wide bear call spread?
I'm saying do both. So like take a debit spread, a vertical. So if it goes up, your debit spread makes money, and then have a credit spread at the same time in like a shorter time frame.
I see what you're saying.
So you could go like dailies. You have weekly overall biases it's going to push up because the market can just do that. But in the meantime, you're conservative about how far it goes each day. So you're selling credit spreads a little above price with like daily expirations or whatever. So you can collect premium and then also maybe see a more expensive debit by the end of the week. What do you think of that?
How is it going to stack up if one, like, is it going to be like one side essentially wins and one side loses? Is that what the net result's going to be? Like, so I guess if price is up to 580, if price is down to 560, or if price goes absolutely nowhere, what's the net result of the trades you just threw out there? Because it sounds like a lot of trading for what happens. You know, if price is here, what do your trades do? If price is here, what do your trades do?
So it would probably be a loss if price didn't move, because I don't think you could collect enough premium to, outprice what you spent on the debit spread, especially if it's 10 points wide. You're probably going to pay like $4 or $5 for that.
Okay.
So it might be a net loss. But okay, one more thing added to the idea. What if you had out of the money puts as well? So if things, but if
how many
price
trades
didn't
are we
move,
taking for this scenario? How many trades are we taking?
40.
40. Okay.
No, I don't know. I'm just trying to workshop some ideas.
No, I get it, dude. I'm just, and right now it's like part of my brain is like, I don't need to overthink this. It's like the portfolio's up. I should be happy. I don't want to over hedge and be overly bearish, because all those are is like little paper cuts when the market just doesn't do anything. If the market's at all-time highs, there's momentum. Everyone's all excited about these cuts. Look, triple witching is legit tomorrow, and maybe it matters. I mean, typically triple witching is about pinning prices because there's so much order flow to get to certain levels. I don't know what that price is. Obviously, like, we blew the highs up today, and we're 1.5% to 2.5% higher on the S&P and the Nasdaq. So clearly, there's no pin price at all-time highs. But I gotta wonder. It's like, I just wouldn't be surprised if this little move to the upside, and triple witching might mean squat tomorrow, but what does matter is maybe the end of the month. And if we're up here at the highs, just like we were with August highs, maybe October starts off on a sour note. I don't know, dude. But I think that broadening patterns are really, really great to mess with everybody, because this gets traders so excited to the upside, and everyone just dumps in here, and all of a sudden the market's like, bye-bye. And it just goes back down, and it shakes all them out, and everyone wastes money at these highs. And like I said, I'm not saying that we have to crash, and I don't think that necessarily we will, but I don't think that a post-Fed gap of 2 to 3% is going to have much continuation to the upside outside of, look, I know 580 was a projected target for a lot of, macros out there and investment banks, and all they did this entire year was raise. Do you know where the initial forecasts were this year when we started the year? Investment banks for the S&P were calling for, let me see when we started the year.
Was it 6,000?
No. January 2024, I think projections were like 4,800 to 5,000 were the projections to start the year. Nobody expected to blow through those levels, and so it adjusted from 5,100 to 5,200 to 5,300 to 5,400. All they do is they're like, well, we're just going to keep moving our targets up. And now it's around 5,600 to 5,800, and probably you're going to see 6,000 if we just keep going higher. It's like they have the ability just to move their targets. If you're trading that crap, it doesn't help. So I'm just like, who knows? But I don't love how we're getting. I mean, look at, we pull back in April, we shrug it off. We pull back in August, we shrug it off. We pull back in September, we shrug it off. But I just wonder, I think this, man, there's a couple spots, rather than me saying oh, it's going to be a broadening pattern, just connect the dots. Look at the chart right there. If we connect the dots, now this looks a little bit like, I'm going to put this on my chart and do a comparison here. Check this out. So I'll go from this level to this level.
Wait,
okay.
Chris, we're
Are we out of time already? Oh my gosh.
Yeah, 11:04.
All right. Nick Phillips, you got to come on at 11:30 now. I'm just kidding. Okay. Russ says, any play on the dollar yen? Did anybody, by the way, this week? I want to, yeah, we we do our thing, dude. Really quickly before I go, I've got some trade updates. So I closed out the SPY for a win. I had some Forex trades, also winners. My pound Aussie was a 100 pip winner. My Aussie Swiss was a winner. I put on a new trade yesterday for dollar Sing. And what else? My actually Swiss positions are actually up a decent amount. I'm currently up about $3,700 on Swiss pairs. So with some positive swap. So anyway, the trade alerts are going pretty well. We'll find out. There's more to trade. I'm just staring at profit today. I'm just going to go through the whole portfolio A to Z. That's my job. So, all right, dude, let's do this again tomorrow. And we'll be on time tomorrow.
Okay.
All right. Thanks, Frank.
Yep.
See ya.
All right. Thank you, guys.
Yep. Bye.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Good morning. Good morning. Getting started a little behind here. Chris Pulver and Frank went over. We love it, honestly. I love hearing those guys talk. I think I say that just about every day. Super interesting reaction to the interest rates yesterday. This is something that I covered here on the show, on the A1 show yesterday, was if we got the 50 basis point cut. Let's see if I kept my triggers up. Yes, I did. Okay, so we got this. We got the 50 basis point cut. We didn't get the 3.9% for the end of 2024 or the 2.6% for the end of 2025. That's June. Let's see where it is. Pull up these projections real quick. All right, so for the federal rate, the end of 2024, we got 4.4, which is 4.4, 3.4, 2.9. 4.4, 3.4. It's really all that matters. Let's see how those stacked up. 4.4, slightly above there, slightly below the hawkish tilt. And then I already forgot what it was, 2.9, I believe. No, 3.4. 3.4 is hanging out slightly below the hawkish and pretty significantly above the dovish tilt. However, the 50 basis point cut itself ended up being enough, I think. Let's actually check the unemployment rate. 4.5 and 1.8. 4.5, 1.8 for GDP. So the only thing that actually hit, they increased unemployment rate projections almost to my trigger, and the change in GDP came down slightly, but wasn't at my trigger number. So the only thing that really triggered the dovishness, the dovish side of the trade triggers that I had projected for yesterday, was the 50 basis point cut. The unemployment rate was pretty close to triggering. And then the monetary policy notes were sort of in line with what we were looking at on the dovish side. This is, if you guys remember yesterday, if you were here on the show yesterday, I talked about this dovish reaction. This potential scenario was likely going to do an initial sell-off followed by a rally. Word for word, in the replay from yesterday's live episode, you can go back and play it. This is exactly what I was expecting, and it's exactly how we traded it in my private group. this initial drop happened, I was a little hesitant to try to start getting involved in this up leg because I didn't have exactly what I wanted, which would have been the 2024 and 2025 dot plots showing a bit more of an aggressive approach from the Feds. Because I didn't get that, I was a little hesitant, but I still ended up grabbing a yen trade. It was a quick sell scalp off of this initial push yesterday. So let's drop down to the 5 second because that's I'm a maniac and that's how I trade. Actually got in right here, grabbed this little position. Price popped up, fell back down, popped up, was down here. When we did a tap here at this area where price had reacted from before, tap twice, tap 3 times, failed all 3 times, did a nice little push, tried to recover, failed, got in right about here, stops above the structure, and got out here at these lows. A real quick trade, and I ended up walking away. I kind of came back later and I saw this setting up and was about this close to taking a position, but I liked the trade I got here. I felt good about it, and so I didn't end up selling out of this zone. I wish I had, because obviously that was the real move for yesterday afternoon. But that trade behind us now, my anticipation, someone asked, anything on yen? Nick, anything on yen? If you had a question about that yesterday, please remind me of what that was, because I'm still, my stance remains the same, that I would love to see yen come down to here. And if we switch over to USD JPY, I'll show you what that would look like on this chart for the Forex traders. That is going to look like selling out of this 151 to 152 range. So is it going to get there? I don't know. Am I going to try to ride technically UJ up? I'm just going to be riding Japanese yen futures down. Yes, absolutely. I like what happened with the 50 basis point cut and the Doxy reaction. I hope to see continued sustained upwards movement out of the UJ, out of the dollar, I should say. The jobless claims numbers this morning that printed, I think there's a little bit of it's a little wild that we had such a massive surprise in the unemployment numbers the day after the Fed's cut by 50 basis points. You know, to see not that many people claiming unemployment, just got a 50 basis point cut, showing some strength in the labor market. It gives me a little bit of concern for potential upside long term, like over the coming weeks, like I would like to see. But we have more data coming. We have flash PMIs next week, which is going to be a big trading opportunity for me. But as far as the Doxy goes, I still would like to see a significant jump out to the 4 hour. I would like to see a significant bit of relief here. Simply because I do still want to sell the dollar over the next yearish. I think big anything can happen between now and this time next year, but my longer term vision for the dollar currently is something like this. We pull up and then drop off. So I'm going to try to ride this leg back up. And then we get into this area here. Hopefully it gets to that area. Maybe it gets to that area. Ride this leg back down. Obviously, fundamentals pending on all of this stuff. So it's been a relatively quiet day for me. I took one position on NQ off of the unemployment, the back of the unemployment information this morning. So price did all this funky stuff after the drop. Where's the unemployment rate? Right here. We had sort of the softness out of NQ was surprising following this print. But once we started this rally and pulled back here, I jumped in on this leg. If we drop down to 5 seconds, I can show you exactly the structure. I tend to look for areas of structure at pivotal points of reversal. So price fell into here. Came into this zone and gave my favorite pattern, shoulder, head. It's kind of a lackluster shoulder, but there's a pattern that I like to take advantage of within a head and shoulders situation where the shoulder, left shoulder will form, head will form, and then maybe this right shoulder won't quite touch the neckline, but it'll come in and it'll hook. I like to think of it as it's hooking. It's retesting this area as new support, and then it gives the shoulder, right? So it doesn't quite come up the neckline before giving the shoulder. A typical textbook head and shoulders is going to be something like this, inverted head and shoulders, I should say, where price comes up, touches this neckline, and then comes back down and touches the shoulder line. But there are times where I like to try to grab it at this initial hook, which I did here. Came in, got this initial hook, I started buying here, and then I ended up closing out right about here, which, you know, I missed out on 95% of the move, or not 95, but 75% of the actual leg. But that's okay with me. I like to just grab little moves and get out, secure my profits, and walk away for the day. But this overall strength that we ended up seeing from NQ, this was the real, I would say, for me personally, this is the actual market reaction to the unemployment data. All of this softness that we initially coming out of it, this didn't make any sense to me. And then I didn't trade anymore after this, but seeing this big spike to the downside, this didn't make much sense to me either. Why would NQ be wanting to press down so heavily off the back of such strong employment information? It doesn't make any sense to me. And then eventually price rallied. So pretty funky price action this morning, I would say. But in the end, at the end of, you know, we're not even 2 hours into technically New York Stock Exchange session, but this rally makes a lot more sense to me than all of this stuff, this price action here that we have. But relatively quiet morning for me. One trade. Haven't really been looking to get in anything else. Let's check how gold ended up doing following some of this. Now, gold did not do what I was thinking it would do yesterday. This initial pull ended up doing it, I guess, late last night, sort of early this morning in the London session. But what I expected yesterday, and I covered this in the call, is that if we get this dovish tip to the print, this was going to be the best case for gold. My concept behind that, my idea behind that was dollar downside can't be trusted on this print because the potential for recessionary fears to jump in and start propelling the dollar to the upside. So even though the typical reaction function should have been dollar sells, as we saw, the dollar ended up ultimately rallying following this initial drop off. And I expected gold to rally almost the entire time and not do its contrarian to the dollar behavior. Meaning, if Doxy drops initially, gold should pop to the upside. That's what we saw. But then the dollar reversal, I didn't think would affect gold in a way that would push gold down. I was thinking that the dollar upside would be safe haven flows and that gold would take hold of that same sentiment and continue to rally. So I was wrong on my gold calls yesterday as far as how I thought gold might react, which was a bit of a bummer, but I didn't even trade gold. So hopefully if you traded gold, you protected yourself and you were, you traded it properly and didn't know for leverage and things like that. Let's see where this is at on a macro scale. We're still hanging out. Where's my A1 at? Have a longer term channel marked up somewhere. Here we go. So we do have that sustained move beyond this channel of resistance, which is what I wanted. I didn't want to get involved in any gold buys when we just slightly broke out outside of this channel. Because honestly, this could sort of have just created a new channel that ends up falling down to the bottom of the so I didn't want to get involved here. Now that we've got this nice sustained push outside of this zone, I think gold buys anywhere above these highs are valid. The problem for me with this is targets. Where do you target? I mean, I guess you target nice round numbers like 26 and 27. But it's a little tough, I would say. However, if you can hack it on some of these lower time frames and price can push down maybe back to this resistance level, may have missed the opportunity to get in on that leg, to be honest, but I wouldn't be upset about buying in this zone here. Not a bad price to start trying to get involved in. Now, granted, an even better area would be right in here, stops below some of this structure maybe, and then ride it back out to, again, targets are tough, but I'd say 26, 26.50, and then 27. But this probably isn't something I'm going to entertain too much. It's an idea for you guys that like to trade gold. All right, guys, feel free to drop any questions that you have in the chat, and I'll go through those. As far as the Bank of Japan interest rate decision, I mentioned this yesterday. I'm not going to trade that. I'm not going to pay attention to it. I don't really care. Not that it doesn't matter. Obviously, it matters a lot. But for me, this is just one of those things where it's like I could hang out tonight. For me, it would be technically like 10 p.m., 11 p.m., 12 p.m., 1 a.m., or not 12 p.m., 12 a.m., 1 a.m. The problem with trying to trade the BOJ policy rate and press conference is you never know when they're going to drop it. So I could be up all night and nothing happens. So I'm done for the week at this point. There's going to be more trade for me. Once this drops, then I'll have a good idea of kind of how I feel about the BOJ and what they're doing. Again, I would prefer whatever happens to the yen fundamentally. I would love nothing more than for it to drop down to here. If we could just get another decent opportunity to buy from these lows, that nothing would make me happier. Even if it dips a little bit below this, trying to buy the yen up out of this zone, I think would be, a fantastic move for me for the rest of the year, actually basically all year next year. This is sort of a longer term vision here. Get this head and shoulders. If we have fundamentals lining up with it as well, boom, nice buys out of here. And that looks like the opposite on UJ, obviously. Be looking for sells out of this zone. So crossing my fingers for this trade to start to pan out for us. All right, let's go take a look at, let's go see where the Australian dollar is. Aussie ended up popping up last night after their employment information dropped. One second, gotta refresh myself on what happened here. Okay. Trying to think back to last night. Drop down to the second, it'll jog my memory here. Yes. Okay. So, obviously I have it marked up here. This is exactly the trade I took was a baby trade compared to the move that ended up happening. But we got the employment information that showed we should see some strength out of the Australian dollar. This big up, big spike down. I didn't get involved over here. I didn't like all this price action. It ended up popping down below some of this here and then pop back up. Once it did this leg here, I went ahead and identified my potential left shoulder, and then I waited for price to hit the right shoulder, started buying in right here, and actually closed out at the top of this wick. So certainly, once again, missed out on a big part of the move, but I grabbed what I wanted, hit my targets, and got out. So Aussie is actually still pretty elevated compared to where we started last night. It's a tough spot for the Aussie because of this resistance level that we're at, that we tapped into back in July, again in August, and sort of close to where December's highs were. Still some room to go to tap into that area. But we are kind of stretched to the upside here. So some negative data out of Australia. The way that I tend to like to trade is contrarian to the position if we get the right data. So if we're stretched to the upside, hopefully we get some downside surprises and data coming up. And then that way we have that calibration effect that has to take place within the market. So the Aussie is priced incredibly high. Well, this data shows us that the Australian dollar is actually worth significantly less than what it's trading at right now. So we're going to go ahead and sell high, right? Buy low, or buy our short positions high, sell our short positions low, right? So that's sort of what I'm looking for Australian dollar. I would prefer negative data for my scalping opportunities. We'll see if we actually get it. All right, guys. Let's see. I'm not seeing any questions. If you guys want to follow, hit me on Instagram or YouTube at official Nick Phillips, or Twitter at it's Nick Phillips. And you can DM me basically any questions. I tend to try to get back to people relatively quickly. And if I haven't got back to you within like 24 hours, just ping me again and I'll get back to you. From all of us here at A1 show at the A1 Trading Show, have a great rest of your day and a great rest of your week. I will see you guys again next week.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.